Opportunities do not happen, we create them. This holds true for the sector we will connect with at FE Boardroom today. Good afternoon, ladies and gentlemen, and welcome to an all new day at FE Boardroom 2022. Today is the third day of the FE Boardroom, and the focus is on micro, small, and medium enterprises or MSMEs. The sector contributes to 45% of industrial output and 49% of the country's exports. No wonder MSMEs are touted as the backbone of India's economy and will play a pivotal role in the country's journey to a $5 trillion economy. Despite the sector's contribution to the socio-economic growth of the country, the sector is reeling with challenges, whether it is lack of access to capital, outdated technology, poor productivity, and the high cost of doing business. We will discuss all this and more in our sessions today. But before we start our day, let me thank our wonderful audience for turning out in great numbers. And thank you to our presenting partners, Commerceify, for supporting us at the event. All of you wonderful people, please use hashtag FE Boardroom 2022 to spread the word on your experience and perspective for the event. To set the tone of the day, we have the keynote session first. Please join me in welcoming Mr. Vikram Gandhi, Senior Lecturer of Business Administration at the Harvard Business School and founder of an impact investment firm, Asha Impact, to speak on how we can drive the agenda of financial inclusion in the country and also relook at the investment strategy to drive change at the last mile. Mr. Gandhi, in addition to teaching MBA courses at Harvard, is also a visiting faculty member at Tsinghua University, Beijing. He's also a senior advisor to the Canada Pension Plan Investment Board and the chairman of the board of the Growth for Good Acquisition Corporation, a recently launched special purpose acquisition company focused on firms that have high growth potential, along with a mission to positively impact the environment and society. Welcome, Mr. Gandhi.
I'm delighted to be speaking at this meeting regarding financial inclusion, the growth of financial inclusion in India, the importance of financial inclusion in India, and particularly with a focus on the importance of digitization that has occurred in accelerating financial inclusion, the progress that has been made, particularly over the last few years, the importance of financial inclusion vis-a-vis the small and medium-sized businesses, which really drive a lot of the broader agenda in this area, and then end with perhaps some discussion around where we should go from here. So where have we been? Where are we today, and where should we go, with a broader concept of profit with a purpose, where financial inclusion is one element, but you could extend that to healthcare, to education, to agriculture, to waste management and the environment, and a whole host of other areas. So let's start with where we have come from, the journey that we have come from in the financial inclusion area. Financial inclusion has historically been an extremely important, and for the right reasons, an extremely important policy initiative for the government of India from a broad development perspective. And historically, the implementation of this has been much more through regulation and mandate, such as having banks forced to have branches or required to have branches in certain areas of the country, the development and encouragement of self-help groups, the initial formation of microfinance institutions, particularly with government support. So historically, it's been, all right, this is our requirement from a regulation perspective or a policy perspective, and here's how we're going to implement it. While there was some success in that, history has shown that as you force things without enough adequate economic incentives, things don't necessarily work. But what did work in this particular case was the transformation of the government-owned MFIs, if you will, the microfinance institutions, to a whole host of privately driven microfinancial institutions. And I've, just as an example, I've been involved with one of them right from the start. So it was called Jana Lakshmi. It's based in Bangalore. And initially was started with some grant and seed money to test the hypothesis of microfinance. It then went into getting impact money, impact capital. And that's how I got on the board, because one of impact investors had invested in that in Jana Lakshmi. It then proved the business model and needed capital to scale, then got in private equity, which was the Tatas were involved, Morgan Stanley private equity, and then TPG, now currently TPG. So brought in private capital at scale. Then they converted from a microfinance institution to a small finance bank, and potentially will go public at some time. So the whole journey of really starting with kind of government, kind of initiative, grant capital, impact capital, private capital, and then maybe public capital is actually a pretty successful journey as far as financial inclusion goes in the microfinance area. There have been discussions or some studies done which show that microfinance may be not solving poverty problems, but there are both sides to that story. And essentially what it has though resulted in is a significant number of folks who would not have access to capital have access to capital, i.e. financial inclusion. What has then morphed in the last so many years is the development of a digital infrastructure which encourages financial inclusion to a much, much higher degree. Clearly, the penetration of Aadhaar, which has been phenomenal, right? 95% of the population today has an Aadhaar card in India, which has resulted in the process of opening accounts or getting people into the financial system a lot easier. 99% of reduction in, for example, in KYC. And there's been a thriving ecosystem that's developed, which has resulted in over $28 billion of private capital flowing into fintech over the last, since say 2014, when this area particularly started. Digital payments have ballooned. The UPI is now viewed as a success story, which is being followed in different parts of the world. And keep in mind, financial inclusion is not just a developing country thing, it's a developed country thing. Financial inclusion is a huge issue in the US. You know, for example, there's over 60% of the population in the US do not have more than $400 of savings and could not deal with an emergency. A significant percentage of the population in the US still do not have a bank account or part of the formal banking system, if you will. So this is not just a developing country thing. You know, the digital architecture which the government has promoted in terms of, for example, the account aggregator framework. So there's been a huge burst, and particularly, you know, the acceleration of COVID, and therefore the COVID-19, while it's had a lot of negative impacts in the world, one of the silver linings is this acceleration of digitization that has occurred here in the last 2 years, something which most people would have projected would have happened over 5 to 10 years has actually happened here right in the last 2 years. And so a big boom, and it's a fantastic outcome. Having said all that, the actual penetration of, for example, cash payments are still 89% of payments in India. Now that compares to about 25 to 75%, depending on the country you're looking at, but it's way higher than where we need to be. While we've got a great amount of digital processes for credit, for example, still the traditional credit metrics are very much antiquated and need to be improved. And then switching in terms of the importance of small and medium-sized business, just taking the whole financial inclusion picture and kind of transferring it to small and medium-sized business, there is still over $200 to $300 billion gap of credit flowing to small and medium businesses to accelerate the development of the country. So that's where we've been historically, where we are, huge amount of progress, but a lot more to do. And then that brings me to the role that small and medium-sized business have to play in financial inclusion. Ultimately, MSMEs are about 30% of the overall GDP in India. I mean, the number of small and medium-sized businesses are a whopping 75 million. It's bigger than anywhere else in the world. And this number is expected to grow to 105 million over the next 5 years, which is great. Again, that growth of small and medium-sized businesses anywhere in the world, including the US, has been the most important catalyst for development and for growth. So focusing on this area and bringing in financial inclusion and other forms of inclusion in this area are very, very critical. Now, having said that, of the 75 million or so SMEs, only 8 million have some form of digitization as part of their process. So there's a huge room for improvement by using technology, which now exists in both increasing the size, increasing the flows, and increasing the efficiency and therefore the formalization of this process. Basically what I call is moving the mom and pop stores to a more formalized institutional kind of setting. Even though they're small and entrepreneurial, you can create an ecosystem and infrastructure around them, which makes them much more efficient. And I'd say there are three elements which one could think about as to how to make that happen. So there's what I would call productivity, connectivity, and discoverability. So clearly, through various technology means, increasing productivity is there. I mean, the technology exists. It's a matter of getting folks to adopt it and it being available in a kind of inexpensive kind of manner. And that is clearly happening, but more of that needs to happen. Then there is the whole issue of connectivity. So helping some of these Kirana stores, which is a big component of small business, converting to much more of a digital front is another big area. And the third I would call really is what I call the whole issue of discoverability, which is really making them aware and people being aware that you have essentially, well, it's both connectivity and discoverability, where it's seamless payment systems that can exist between the customer and these Kirana stores. So I would say the whole connectivity, discoverability, and productivity together, the technology exists. It's more an issue of penetration and getting the small businesses to actually adopt this and do this in a more efficient manner. So we've got financial inclusion, we've got the importance of small and medium-sized businesses in making that happen. And then the question is like, what is the opportunity here? And when I talk about opportunity and this whole concept of profit with a purpose, there's no real government regulation or anything that needs to happen. And there may be a few things which I'll talk about in a second. But ultimately, it's making the economic case that there is a huge profit pool to actually focus on some of these areas from a profit with a purpose perspective. And what do I mean by this? So if you look at the Indian population, it's approximately 1.4 billion. About, say, 200 million, roughly, I'm just going to use rough numbers here, would be the upper class and the rich and the middle class, where most private capital and most investment and most economic activity are focused. Then I would say roughly there's 400 to 500 million, which are towards the bottom of the pyramid, where it's very hard to actually make a profitable business case on servicing that population. And clearly that percentage of population has decreased dramatically because of all the initiatives, both on the public and government side, as well as the private side. But that's where a large part of government spending, development spending, philanthropy, and charity is spent. You still then have what I call 700 million people. That's like two Americas in the middle there, which are what I call the aspiring middle class. The wallet shares are growing, the aspirations are growing, the demand for goods and services are growing. And therefore, there's a huge need to be filled. And if you do fill that need, there is obviously a massive purpose in that, but there's a huge amount of profit. And that's where the profit with the purpose kind of comes together. And therefore, and I would argue that a big part of this opportunity is really with the small and medium businesses, with the entrepreneurs, on fulfilling this gap. Historically, products and services to service this segment of the population has been through forced or through government regulation, like, for example, banks having to open branches in these areas to service that population. Well, if you focus it that way, then it becomes a cost center. It's like a cost of doing business as opposed to a great business opportunity. But what we are finding, and at Asha Impact, which is an impact fund, which I'm one of the co-founders at, we found an enormous pipeline of fabulous entrepreneurs who are focused on that 600 to 700 million people. That is their bread and butter of their business. And therefore, there's profit to be made. They're building business models which target that customer base at price points which make sense for that customer base, with business models and cost structures which result in a profitable business which covers your cost or increases your cost of capital, increases value. So there's a lot of profit to be made. And like I said, you're fulfilling a massive purpose by providing products and services to those folks who would not otherwise have them, whether it be financial services, health, agricultural products, education, whichever category you look at. So I would say like the constant kind of dilemma people have is, oh, I either can make profit or I can do good for the world. And I would argue that in a place like India, particularly through entrepreneurs, small businesses, medium businesses, there is a huge opportunity to make significant profits, just like you were as if you were purely a commercial operator, and have massive purpose in moving the needle on the broader development agenda of India. So big believer, Asha Impact has been, and there are a lot of other impact funds. There's the Impact Investors Council in India, which has been set up to kind of encourage this, encourage capital to flow into this, because still a majority or most of the capital, both on the impact side or even investing in a lot of the digitization that's happening in India, is foreign capital as opposed to Indian capital. And I do think a big policy should be to develop that. So two things in terms of from a policy perspective. One is, there still is a indirect tax regime which distinguishes between private enterprise and public enterprise. So the private are disadvantaged compared to public, and Indian investors are somewhat disadvantaged relative to foreign investors. So trying to equalize that would be one broad policy objective. But I think the bigger one is still the ease of doing business. I mean, the World Bank has said India's ease of doing business has improved, et cetera, but I think we still have a long way to go. If someone is to set up a new business to fill this gap and make lots of profit and have lots of purpose, it is a real uphill battle. Labor laws are archaic. You still are required to, in a lot of cases, to have physical ledgers. We're talking about digitization and converting the whole country, and you still have to have physical ledgers. I read an article the other day that in a business context, there are 26,000 opportunities that a small business owner could be sent to jail for. And like, how can you operate in that kind of environment? So therefore, the regulations that are there are antiquated. They are not in line with what's required from in a digital environment. And that's, I would argue, is something that the government can actually do. Beyond that, I think it's an entrepreneurial ecosystem. Financial inclusion is a huge opportunity, as is, so that's fintech, but as is health tech, ed tech, agri tech, clean tech, you name it. India is a hotbed of opportunity for small and medium-sized businesses where you can make a lot of money for yourself, for your investors, create huge amounts of value, and be doing significant good at the same time. So with that, thank you again very much for giving me the opportunity to give my thoughts to you. This is a course that I teach at Harvard Business School, which has become a big area of focus on sustainability, impact investing, incorporating ESG into the investment process and the operating process. And I see that happening in India as well, because as I said, there's 700 million people out there waiting for great products and services. And you as an entrepreneur and a small business owner can provide that in a very, very profitable and scalable manner. So thank you very much.
Thank you, Mr. Gandhi. That was a very comprehensive view on the state of financial inclusion in the country and the journey we need to traverse as a country. Moving on to our first panel of the day. Building resilience in MSMEs is one of the most important aspects of the business. The next panel will discuss the right policies and interventions required to provide a fillip to the sector, what has worked in the past, and what more is required to really make in India. Let me introduce our moderator for the session, Mr. Mohammad Athar, partner and leader, industrial development at the consulting firm PwC India. With expertise in industrial development and investments promotions, he works with multilateral development banks like Asian Development Bank, World Bank, and on government's large-scale transformation projects focused on industries and MSMEs in South Asia, Africa, Central Asia, and Middle East. He has executive education from Howard Kennedy School and INSEAD, MBA from IIT Kharagpur, and is currently pursuing a PhD from IIM Indore. Welcome, Mr. Athar. Requesting you to please take over and also introduce our distinguished panelists.
So good evening, everyone. A very warm welcome to all of you, to our esteemed panelists who have joined us on this important topic of thinking about the whole MSMEs and the economy they create. And it's an important topic as we will dwell deeper into this discussion, because MSMEs have been at the core of our India's economic growth, whether in the form of the enterprise creation or their role in exports, and even in their role around the way we have gone about getting into the gig economy. But before I get deeper into this discussion, let me quickly introduce all our panelists today. First of all, I'd like to welcome Professor Niharika Vora, who's the Vice Chancellor for Delhi Skill and Entrepreneurship University. She's an expert at behavioral science. She has done a lot of work in organizational behavior for the last 2 decades. She's been a professor with IIM Ahmedabad. She led the doctoral program over there and has, to her credit, several research papers. A very warm welcome to you, Professor Niharika. Let me also introduce Professor M.H. Bala, who comes from Indian Institute of Sciences, Bangalore. He has over 32 years of professional experience, and he's been very well known for his work in the field of industrial economics. He's kind of published over 100 papers in this area. And to his credit, he has done a lot of work in the areas of the whole entrepreneurial ecosystems for tech startups, the whole evolution structure, and even the focus on technology business incubation. A very warm welcome to you, Professor Bala. And it's great to have somebody from industry who has been with the industry, involved with MSME for a very long time. A warm welcome to Mr. Anil Bhardwaj. Mr. Anil Bhardwaj is the Secretary General of Federation of Indian Micro and Small and Medium Enterprise, FISME. He specializes in areas of industrial and trade policies and has worked on framework for promoting ease of doing business, regulatory environment for MSME, focus on market access for MSMEs, and several issues, including the whole focus on WTO trade negotiation and regional trade agreements. So as we can see, we have a very knowledgeable panel over here, and they all come from their distinct focus areas on MSMEs. So I hope this 45 minute session with all of us really builds up this whole narrative around how do we make MSMEs more resilient. So if you want to use this 45 minutes to think about, while at one end we see their immense contribution around several dimensions which are critical for a country's growth, for its economy, for its GDP, and some of the numbers which are indicative to the MSME's impact in our country's GDP is, for example, as per one of the estimates, 29% of GDP actually gets created through MSMEs, and 48% of our exports and over 110 million people are employed in MSME sector in our country. But what's been a challenge is that if you see from a structural perspective, 99% of our MSMEs are still micro, and less than 2 people are employed in those firms. And one can imagine the kind of productivity, innovation one can imagine with such small size firms. More so recently, the pandemic really impacted the performance of MSMEs, and there's been a lot of challenges related to their financial health, as well as the resilience of MSMEs and their owners. One of the key issues people talk about MSMEs, especially in India, is their inability to adopt to digitization and to innovative ways of working. There has been limited work done around internationalization of MSMEs, and that has also impacted the demand condition. So if that's the backdrop of the way, while at one end we see the importance of MSMEs, but we are also seeing challenges related to MSMEs. What do we need to do differently? How can we get a framework of driving innovation, enabling predictability in demand, helping MSMEs adopt digital interventions, and support them by creating an ecosystem where the cost of compliance is less and they are able to bring more resilient ways of working? What do we do differently is what we are going to discuss this in the next few minutes. And on that point, I would request Professor Bala to come in, and I would request his opening remark on this whole challenge of demand and predictability for MSMEs, and how do they access to demand, what could be done differently, and how can the demand be more predictable for them? Professor Bala.
Yeah, I would like to make reference to the structure of Indian MSME sector as of now. As of now, I mean prior to the pandemic, because we have statistics pertaining to the period prior to the pandemic. And if you look at the structure of MSMEs, almost 97 to 98% of the enterprises was accounted by micro enterprises. That means there's a lopsided distribution. And coming to small and medium enterprises, they account for hardly 2 to 3% of the total MSMEs. Now, micro enterprises have their own deficiencies, drawbacks, shortcomings, primarily because of the uneconomic size. So given that, if you look at the small and medium enterprise sector, they too suffer from the diseconomies of scale, but may not be to the extent of micro enterprises. So given that, I personally feel that small and medium enterprises have greater scope, greater opportunities to penetrate the international market. Now, having said that, we also need to understand the contrast that currently prevails in the context of MSME sector. On the one hand, almost 1/2 of India's exports emerges from the MSME sector. But on the other, the contrast is hardly 1 or a couple of percentage of MSMEs only have succeeded in penetrating the international market. But please note, even this percentage, though it is negligible, the more alarming issue or fact is that a good number of them is intermittent exporters. They are not continuous exporters. That means whenever the market trends are favorable, they are able to export. The moment the market trends become hostile, they turn towards the domestic market and they do not think of accessing the international market. This is the first issue. Now, the next issue is coming to the micro enterprises. I have a strong feeling or suspicion that the large majority of micro enterprises would have actually got vanished, particularly in rural India, due to the COVID-19 pandemic crisis. So that is one issue, but in many cases, they are likely to bounce back, mainly because micro enterprises, particularly in rural India and semi-urban India, they actually operate under the conditions of free entry and free exit. So they, with minimum socio-economic consequences, they enter fairly easily, they exit fairly easily. So during the pandemic times, particularly during the first and the second waves, I feel a good number of them would have exited. So, but I also anticipate that many of them would have bounced back. No, particularly they would have suffered the most in urban India, particularly in metros, but they would have suffered the least in rural enterprises. Now, the next issue is how to enable them to penetrate maybe the larger market within the country and the international market. See, the major problem with Indian MSMEs is they do not innovate on a significant scale. Now, whatever innovation, particularly I'm referring to technological innovation, because innovation can be marketing innovation, organizational innovation, technological innovation, financial innovation. Financial innovation, of course, many of the rural enterprises might be doing on a day-to-day basis. Nobody has explored, but I have a strong feeling that they must be involved in financial innovations, the way they generate funds for their survival and growth. Now, coming to the technological innovation, if you see, based on my own research experience, what I have observed is a significant chunk of whatever MSMEs which are engaged in technological innovations, they do mostly incremental innovations. If you coming to the radical innovations, it is virtually absent in the MSME sector as a whole. Now, you may find it in the medium sector to some extent and the small scale sector to some other extent, but not in the micro enterprises sector. The issue is what actually is responsible for the negligible presence of technological innovations in general and radical innovations in particular. See, Indian MSMEs by and large are known for suffering from resource deficiency, particularly finance. Now, when they finance and of course technological capability as well. Now, in Western countries or even in other emerging economies, now MSMEs which have some amount of financial capability and technological capability, they are able to access external support in the ecosystem, and they are able to penetrate the larger market, including the international market. But in our case, they are not able to do that because the ecosystem support that is available to them itself is limited. Now, why is it so? Because the ecosystem itself doesn't have the kind of what I can say stakeholders or organizations or even initiatives to support the micro sector. Now, coming to the core question that you have raised is with respect to demand. Please note, innovative enterprises are always able to overcome whatever kind of economic crisis that they may face, maybe because of recession, induced recession, or spontaneous recession. They are able to deal with that. That means we need to lend some kind of a basic support required for the MSME sector in terms of strengthening the ecosystem. And strengthening the ecosystem, what we mean is strengthening the ecosystem in the regional clusters of MSMEs. According to the Ministry of MSMEs, there are more than 300 MSME clusters. I'm talking about modern MSME clusters. Now, it is to begin with, we must strengthen the modern MSME clusters now to enable the MSMEs to develop networks, to undertake innovations, and to penetrate the larger market. I'll stop at this point. Maybe I will join later when more questions emerge.
Great points, Professor Bala, and I really, like your point on the gap which we are seeing, especially on the financial resources which MSMEs would like to have, and especially the absence of stakeholders and initiatives and even key organizations around it. And I'll come back to you on strengthening the ecosystem even more, because the government I've seen tried to do several policies of cluster development in the past. It gave some impact, but there have been some deficiencies and what can be done more. And Mr. Anil is here and I'll talk to him more about it. But before I go to Mr. Anil, actually, I wanted to ask Niharika ma'am, ma'am, if you see, there was a recent survey that even, we have had 4 waves of COVID and I don't know how many more will come, but the employment in MSMEs have still not reached the pre-pandemic workforce level. And there were several surveys in India. People estimate MSMEs are still operating at 58% of the pre-pandemic workforce level. Indonesia is around 60-odd%. Nigeria is even around 70%. Now, MSMEs, we saw that during COVID, there was a large, migration back to various locations. And this also became very difficult for MSMEs to hold on to their order. What could have been done differently from, a labor law perspective or from a workforce agreement framework perspective that could have really supported MSMEs in terms of managing the expectations of workforce much better?
So thank you, Mohammed, for your question. Honestly, I don't have an answer for that, because it is a tough one to say what could have been done differently. Because the people who moved out were not necessarily the ones who worked in MSME. There were people who worked in the informal sector, people who possibly worked in construction, in all of that, which is not necessarily MSME. Yeah, I think the employment level in the MSMEs is low because of capital. A lot of them have rather than investing in business, have basically used the money to survive through the waves of the pandemic. The savings of the country, the quantum of the savings have really gone down. So we have survived. Yeah, and I think that's very important that we survive, and then I'm sure work will happen and employment will come up. So I don't know what could have changed the MSME status? Could there have been an economic pump in earlier, which would have helped the rural MSMEs to keep going? But I think the last 2 years are unusual, right? We don't see that every time, and hopefully we will not see, at least in our lives further, we won't see a pandemic. So I think the capacity of people to buy goods, services, trade, all was very low at that point of time. And therefore, in a way, it is possibly sustainable to pause rather than to keep doing something and bleed in that sense. So my belief is that it's a natural, sustainable way of managing. However, I want to talk a little bit about the micro, because I think the micro is a very different from the SME, as Professor Bala has also mentioned. If you look at the micro, I think at max, they will do 10 employees. They will not do maybe more. And in my mind, I think the magic is not in getting them to become small. I think the magic is in making sure that this 10 maybe becomes 15, or these 10 put together actually create greater value. Because it's like, I have written this elsewhere, you can't hope that if you give too much water to a nimbu tree, to a lemon tree, it will actually become a banyan tree. It's not going to. Then by nature different. And if something is by nature different, I think we have to treat them differently. One of the ways to think of these differently is the fact that, and I see this very often among women enterprises as well, is that the basis of starting the business is a skill that I own. And I'm using that skill, I'm monetizing that skill to create a livelihood for myself and maybe associated people along it. So if I run a small boutique, I'm using my skill of maybe knowing how to do stitching. I'm employing 3, 4, 5 other women who are maybe sitting at home doing part-time work for me, and so on and so forth, which is basically the use of one skill to create value. I think a lot of the large businesses or even the medium businesses are the skill is to create value, not with the skill is to create value. It's the skill that I bring is not my skill of being a excellent carpenter, but the skill that I bring is I can bring a number of resources together and create value out of it, and therefore create an enterprise out of it. And so these are really different kinds of enterprises, and therefore we have to look at them differently. So one is more, I would say, additive, and the other is more multiplicative. And so in the micro, especially, I think the focus has to be on, can we improve the skill levels of the person who's using their skill to create value? And in that process, can we also introduce better and more sophisticated practices of whatever that they are producing at this point of time? And that is a very difficult and a long, arduous path. But that is something that we possibly need to do if we really want to create value for the micro enterprises. On the other hand, I think the small and medium require a different kind of intervention. Maybe we will talk about it later. But as of now, I just wanted to mention that I see them as two very different things.
Thanks, Professor. And especially, I like your point on micro remaining micro, or maybe at best reaching some scale, because that's been a big debate, and that's a fascinating position you are taking, because there's a big debate happening about why do we have such a large micro, and is there a need to have a larger small on it? And I'll come back to that in a while. Mr. Bhardwaj, because you represent the Federation and you have had a very good experience working with SME clusters, and I see FISME being very active in promoting good practices across clusters. There's been a general debate about that this country, especially India, created good ecosystem for large industries in the form of industrial parks and industrial clusters. but not necessarily for MSMEs as such in a specialized way. So if you see, a lot of MSMEs still exists in our urban areas, involved in urban setting, and as a result of it, there have been challenges around, of various kinds, especially when there were restrictions on movement of goods and all. And because in urban setting, we have a lot of MSME population, that became a challenge. What do you think is required right now from an MSME ecosystem perspective? Does it need to be differentiated? We had schemes like cluster development program, but some of that didn't necessarily come along with large industrial clusters. So should they have been co-created to say wherever we are having large clusters of manufacturing, the MSMEs should have been created from a supply chain perspective? Do you think that as a missing element? Second, should we have differentiated ease of doing business and cost of compliance measure for MSMEs the way they're priced out? Should there be more support mechanisms for them? What's your opinion around some of that?
Well, there is a great gain of truth in what you have just said, that there's a lot of informality in the MSME sector, and different databases will tell you the numbers, but ranging from anywhere between 95 to 99%. And one of the reasons, the major reasons for this informality is actually the cost of compliance. And so, I mean, that clearly shows that we have, as a country, a lot of ground to cover to create an ecosystem where majority of MSMEs could work in a manner which is more formal. And that doesn't mean that they should become immediately small or medium or large, but the idea is that they should be able to access the promotional and regulatory institutions the way their smaller and medium enterprises can do. To give an example, that 90% of them, they find access to affordable authorized working space as a major issue. The most critical issue for over 90% of MSME sector, comprising of self-employed people, for example, is the need to legally work from residential areas. That's the area they work from, and without incurring penalties from the utilities and the municipalities for misuse. It is a common sense thing that the tag of working from unauthorized area cuts them off immediately from all promotional and financial assistance programs. And that's the reason they enter into a vicious cycle there. Because they are working from unauthorized areas, so they can't have access to capital. And because they can't have access to capital, they can't have machinery, better machinery. Because they can't have machinery, they don't require trained people or skilled manpower. So it's a vicious cycle, unfortunately. And that needs to be broken. So we have to create affordable residential, working space, not very far from residential areas, in an intelligent manner, where from people can work. There are several other things that need to be really addressed to address the issue of informality. One other issue is life after failure. You'd be surprised to know that in India, for 97% of firms, that is proprietorship firms and partnership firms, there is no mechanism for insolvency. So any default means jail. And there would be, quite a news to you that more businessmen commit suicide in India than farmers. And because there are not that much of, political sensitivities attached to businessmen dying instead of farmers dying. So this issue always takes the backseat. So we have insolvent bankruptcy code, but that is only applicable for the corporate, the body corporates, that is the private limited companies. But as I said, that 97% or more than that of MSMEs are proprietorship partnership firms, individuals. So any default is basically their individual default, and we do not have any mechanism currently for addressing these issues. Because of this reason, what happens is that they try to either not take loans from the bank and work in such small capacities because they have just borrowed from the limited groups of friends and families. So they work under the carpet, so to say, and they remain, they work in very, very micro or rather tiny sort of with a tiny sort of machinery and tiny setup. And that makes them quite vulnerable to the shocks that, for example, recently we have seen. So, and I think Niharika ji was correct when she said that, you know, the people we saw walking from during the closure time, walking towards their home in Bihar and eastern Uttar Pradesh, were the people, you know, who were employed in these informal enterprises, where there were hardly any formality attached to their employment. And they were the first to be closed down, and not really the factories. For example, in the second wave, hardly any factory was closed down, especially in the industrial areas. They were working. The capacity may be less. Maybe somebody was working at 50% of the capacity, some at 90% of the capacity. So the point being that, you know, if you want to really see the micro enterprises becoming a little more formal, so that they can have access to the promotional setup that is their regulatory and promotional setup, and thereby attract capital, enhance their technological capability and human resource capabilities, and have greater can say capabilities to sustain the shocks like the one we have recently seen. But there are other things I'll maybe tell you when the second time.
No, fascinating points, Mr. Bhardwaj. Very insightful around the issues and sole unauthorized working areas, limiting their ability to access various things. And then that's so true, we keep on seeing and hearing about it. Interestingly, there have been initiatives with the ministry keeps on talking about. One of them is they're thinking about creating more MSME parks in urban areas where more rental space is available in affordable manner, so that MSMEs actually access that. How much of that is successful, one will see. But on that point, I would like to go to Professor Bala, and I've seen his work on integration with global value chains, and I want to really ask him that exports are seen as a big opportunities. Indian MSMEs have been traditionally quite significantly involved in exports, but exports also bring the focus on productivity and the quality of the product, and then that's been one challenge around it. How do you see the potential of exports from MSMEs? What are our sweet spots? Are Indian MSMEs doing really well in certain sectors? And do we need to really incentivize much of that? The government recently came out with a production-linked incentive scheme. Do you think an export-linked incentive is something for MSMEs should be thought of that is more focused on enabling their productivity? Some of those questions, Professor Bala, if you can answer.
Personally, I'm not in favor of in providing incentives, because incentives themselves will not do wonders. Unless and until MSMEs are strengthened from the base, they will not be able to enter the export market. Now, let me share my research experience. I have done a good number of projects focusing on Bangalore-based MSMEs. Now, Bangalore is one of the very important industrial clusters. It's also internationally recognized one of the innovation clusters, one of the startup hubs. And the advantage for MSMEs which are located in Bangalore is that there's a relatively strong entrepreneurial ecosystem in terms of all the stakeholders. Now, focusing particularly on the regional innovation system, you need to have a strong R&D base, you need to have a strong base of large firms, and you need to have a strong base of academia, and also a relatively strong supportive government. Now you see all these elements vibrantly existing in Bangalore. Now, as a result, my focus is relatively more on engineering industry MSMEs. What I found is a significantly large proportion of engineering MSMEs are engaged in innovations. That is because they are better networked. In fact, when I say engineering MSMEs, a good number of them are subcontractors. So they are linked either with the public sector enterprises located in Bangalore or private sector large enterprises or MNCs. And when they are linked with these enterprises, particularly referring to MNCs, what happens? It is not just the marketing support that they are obtaining through their links with MNCs. They also get, say, product-related assistance. It could be technical training. It could be purchase assistance. So, right. So different kinds of support is provided by the MNCs which are located in Bangalore. MNCs like auto component MSMEs maybe, because we have Toyota, we have Bosch, we have Volvo. So they all provide different kinds of support. This is one thing. More importantly, many MNCs located in Bangalore, they provide leads to the local MSMEs to reach the global market. They connect them. Now, but please note, it is not that MNCs simply jump on the local MSMEs and start business relationship. In fact, MNCs, they have their own way of gathering information. And when their information is credible, they approach some of these MSMEs. They offer them a challenge. What they do, they bring a component and they ask them, look, this is a component manufactured back in our country. Can you manufacture a component of the same quality at a lesser cost? Now, when the challenge is accepted and the challenge is fulfilled, overcome, then that particular enterprise will get the subcontracting opportunity. Like that, a good number of MSMEs, they have actually, though look-wise, or let us say the premises and all, they may look bad, but because of the technological talent prevailing in the enterprises and because of the support that they have obtained from the local ecosystem, they are able to innovate. They are able to impress the local MNC customer, and which enable them to reach the international market. And please note, once some of these MSMEs, when they reach the international market, they understand the value of packaging. They understand the value of price. They understand the value of quality. So then that motivates them to innovate better to suit the international market, and they export more. Good number of instances are. That is precisely why my argument is, please strengthen the regional cluster technology base. Enable the regional cluster-based MSMEs to develop networks with the ecosystem stakeholders. Enable them to innovate and enable them to penetrate the larger Indian market in a better way, and let them enter the international market subsequently. In fact, Indian MSMEs have plenty of opportunities in the global market. The way Chinese MSMEs have grown rapidly, have entered the international market, I personally feel our policymakers and our researchers must have drawn a lesson, a road plan for our MSMEs to reach the international market in a similar way. If you give me one more minute, I will tell you, you go to any supermarket abroad, particularly in the developed world, you will see good number of Chinese products which may not be of great quality, but they have penetrated these supermarkets. I would say 60 to 80% of the products are accounted by Chinese MSMEs. I have the habit of going to the supermarkets and looking for Indian products. So I would say hardly a couple of percentage of the total products now would be accounted by Indian MSME products. I feel this conscious plan must be done to strengthen their base, enable them to upgrade the quality, enable them to engage in innovation, enable them to penetrate the regional market, national market, and international market. Thereby, we need to transform the MSMEs in a big way. Given that, I would like to add just one point. See, micro enterprises are substantially large. I would like to divide the micro enterprises into three groups. One, they vanish, they come and vanish. In other words, they enter, they exit, depending upon their convenience, depending upon the suitability, depending upon the market support, right? But then another group, which actually is able to survive, but they have no tendency to grow. So they will never become part of the organized sector, and they may not become small and medium, because this is mainly a substitute for employment. So they survive. They function as they are. So we need not bother even about that. But in the third group, which has the potential to get modernized, to become small and then medium. In other words, gradual growth is possible at least for about 1/3 of the micro enterprises prevailing in the country. So we need to understand their problems. We need to enable them to develop networks, to innovate, and to internationalize. I will join later to add more points.
A great point, Professor Bala. Really interesting to think about how to improve the base of MSMEs and then enable them to create these networks. And as internationalization happens, they themselves evolve into understanding the importance of packaging and the quality, that's needed. Great inputs, Professor Bala. I'd like to request Professor Niharika to come in and talk about, ma'am, there were a lot of labor reforms that were done by the government, and also they thought about the new sources of employment creation, for example, gig economy becoming an important source of job creation. Have you seen that? Is this a great attempt from a labor act and from a framework of contractual labor perspective, that is this really helping MSMEs? Do you think something else needs to be also done? And especially from where we are seeing a lot of e-commerce jobs creating a lot of small companies coming into the whole services sector, what needs to be done further?
So again, I think the important thing is to, we can make as many reforms, but if the process of getting clearances and if the process of getting the required tick boxes, the boxes tick marked is very cumbersome, and it is kind of conceived by the urban tech savvy population, people sitting in offices like ours. I think whatever we do does not really help at the base, because we are talking about a base, people at a certain level where there are real challenges. And the pandemic has definitely shown to us, especially in the education field, that while we have been all happy that we did online classes, the reality is that many of the students have been in one room homes with a grandmother playing the TV and a lot of other kids talking around, and really like no space at all. And yet we have continued to think that that was the best model that we could do. So my point is that yes, we can make the reforms. Those reforms anyway are sometimes not fully thought through. But I think even then, whatever little changes that happen, unless we can make compliance easy, really it becomes not possible to grow or not possible to take advantage of it. I think an interesting example of it is, this whole move to do Udyam from, the registration on Udyam, which says that actually compliance would be easier. But if you were to, from what I have looked at the data, and I'm not 100% sure, but what I've looked at, actually in Udyam, they have de-recognized trade as a MSME thing. So in fact, from, so there is manufacturing, there is services, and there's other businesses, and and trade. And trade is almost 33% of the MSMEs, and the Udyam completely de-recognizes it. So, someone either did not see it or did not foresee it. And therefore, suddenly there were a whole lot of businesses which were earlier MSMEs, simply don't have a status any longer. So I think unless we start to think of implementation with its entire diversity, the country is a diverse country. We are very spread out. We are very different. And every part of the nation has its own challenges of compliance. And I think unless we can build that into our thinking completely, some of these remain like very good ideas on paper, but and very few people actually can take advantage of it. And I of course, I'm from the area of education, so often have examples from there. It was not even 3 years ago. I mean, yes, it was just before the pandemic really hit us. I had the opportunity to go to some of the CBSE schools in Arunachal Pradesh, where the pass rate is 3 or 4%. And we were looking at why that was happening. And there were students, 110, 120 students who were going to appear in class 10 or class 10 computer science, computers as one of their optionals, and the school had no computer. So all I'm trying to say is that, and Arunachal is one flight away from Delhi, right? And maybe 5 hours of a road trip to some of these places. And yet the reality is that when policymakers think about things, they're possibly still thinking within their range of being able to think. And we are a much more diverse country and a much more complex country than I think we have given ourselves the room to think like that. So that would be my point on that one.
Understood. So, for example, so I take from you the implementability is a bigger point than the the whole focus on reforms and is it really getting captured on the ground? Great point. Clear. So that's where maybe let me ask Anilji on. There's been a lot of discussion on ease of doing business and several reforms on ease of doing business. What exactly can we do to create differentiated ease of doing business at a cluster or at a local level? What would be your 3-4 suggestions on that?
See, although there has been some progress in ease of doing business, there is no doubt about that, especially if we compare it from the last 10 years or so. But the fact remains, the number of registered enterprises on the Udyam portal is hardly, for example, 50-55 lakh. Out of 50 crore enterprises that are recorded in the NSSO survey in 2015-16. So, I mean, there has not been any major jump of registering, and that shows that that the unease of doing business remains at ground, and it is in several. Let me tell you first of all, with regards to the dysfunctionality in accessing the factor markets, whether it is raw material. So raw material, for example, iron, steel, copper, aluminum, polymers, all these items are manufactured by a handful of manufacturers in India, and their produce are greatly protected with the help of tariff and non-tariff barriers. So if you want to be, for example, Mr. Bala was saying that he couldn't find much of Indian produce here on the shelves while he's going in foreign countries, and that is because Indian manufacturing is not competitive. So the question is that how Indian be competitive, how Indian manufacturing can attain scale and quality and depth, so that they can be part of the larger supply chains, global value chains. So I told you about access to raw material. So is the case to access to finance. 75% of the banks in India are still in the government hands. So there is hardly any competition among the banking sector with regards to giving loans to MSMEs. Hardly 10% of MSMEs have access to institutional funds. Third, access to land. There is hardly any plug and play, supply of plug and play infrastructure where a first generation entrepreneur, young entrepreneur can set up a manufacturing unit. They would come around and set up an e-commerce company or whatever, in services sector or e-commerce. But what about manufacturing? He would not get funds for manufacturing. He would not get place to where he can start up a factory, because the cost of the land itself is going to be in crores, which is impossible for a new first generation entrepreneur to set up. So excessive cost of land becomes an issue. Then the labor force also. Labor force in India, see MSME, less than 2 per unit is the number, which shows that almost an entire manufacturing in India is informal. Surprised that I think the Harika ji was saying about more than 10 people in micro enterprises, you'd be surprised that out of 6.3 crore enterprises, barely 2.25 lakh have more than 10 people. Imagine. So we hardly have 2.5 lakh company. That's it. So this is the size we have of manufacturing. So recently, I contributed a paper for India Vision 2047 and identified three reasons, three major handicaps that Indian MSMEs are facing. And that captures what the question that you asked. The first issue is about technological obsolescence. So most of these manufacturing enterprises or the sectors or segments have been reserved earlier till 2005-6. So they have been really micro. Only slowly and slowly they have started growing up, but they are facing huge problems while migrating from micro to small or to small to medium. Because the moment you migrate from small to medium, the cost of compliance has increased exponentially. And there is a incentives that is there, or perverse incentives, so to say, that encourages people to remain small. And that is why we have a missing middle. And public procurement. See, 1/3 of India's GDP is equal to public procurement. So we are talking about $1 trillion or so business that government procures. And it is the choice of technology there, the choice of the quality, the choice of the commercial practices that ultimately defines the bracket within which Indian MSMEs have to work and find a scale. So all three things, reforms are needed in all these areas to of MSMEs so that they can become large enough or can acquire the scale that is needed to be part of the global value chains.
I can just admit that if you try to package few, maybe several hundred years of experience together on a panel like this, you are really running short on time, and you realize that there's very limited what one could touch upon. Absolutely, great ideas on enabling the competitiveness of MSMEs, especially the whole focus on thinking about creating their networks and how the networks will further enable their growth. Thinking more about the implementability of reforms versus, putting a paper or a note or a regulation around it. How do we think about reducing the cost of compliance at a local level and creating frameworks which could be in the form of plug and play infrastructure or ecosystem that can really drive innovation for MSMEs, and many more which were discussed. So as we come to a close on this panel, any final comments from any one of you? Otherwise, I'll just kind of would like to close this panel. So any last comments from any one of you? Please feel free to make that.
I feel the technological issues affecting the MSME sector must be dealt with on a priority basis. That would do great benefit to the sector as well as to the country.
And
thank you, Professor Bala. Last point, Professor Niharika. Yeah.
And just to add to what Dr. Bala has said, I think the technology integration and adoption will happen if we also have greater focus on training and skilling of the entrepreneurs. And I think that's it's a tough problem to crack, but it is really important because that's how we can do it.
Sure. Mr. Bharat.
See, these are interrelated issues. If MSMEs are exposed to opportunities, and if they can access, for example, the capital, then they can have access. And in order to use technology, they would be required human resources which are properly trained. So it's a kind of interconnected thing. So the first thing that we have is that exposing them opportunities and providing, you can say, enough capital, affordable capital, so that they can build up the kind of enterprises we need in manufacturing sector.
So thanks a lot for giving these great suggestions. I think it's kind of a great base for setting up a policy note on enabling resilience in MSMEs and all these points that were discussed. So thanks a lot for your time. And I look forward to continued engagement on this thematic with all of you. Thanks a lot once again.
Thank you.
Bye-bye.
Thank you very much.
Thank you, our esteemed speakers, for this discussion. Now, that was a heavyweight discussion with many insights on driving demand for MSMEs and creating an enabling ecosystem for the sector. Before we move ahead with the day, I want to say that to me, a good event is governed by the audience. Here's to the wonderful audience who is sharing the event on social media with hashtag FE Boardroom 2022. Moving on, ladies and gentlemen, our next panel is an interesting one as it talks about the great Indian retail. Retail industry has evolved majorly in the past 2 years, all thanks to MSMEs that the industry is on the way to become Atmanirbhar. Our next set of panelists will talk about the saga of great Indian retail in India resets, growth, expansion, diversification, and the way forward. Please welcome Ms. Pushpa Bector, Executive Director, DLF Retail, Mr. Mohit Kampani, CEO, More Retail Private Limited. And to moderate the session, we have Mr. Sudhakar Radappa, founder and CEO, Commerzify.
Hello, everyone. Welcome to the FE Boardroom conversation with Mohit Kampani and Pushpa Bector. Thank you, Mohit and Pushpa, for joining us. The topic of discussion of this panel is the saga of great Indian retail in India resets, growth, expansion, diversity, and way forward. Because of this corona pandemic, the retail has seen the brunt of it, disruption of supply chains across the board, shops getting closed. We've seen mayhem, in the retail sector. So how do you cope up with this, the whole reset of Indian retail? Pushpa, your thoughts on that?
Well, thank you. Thanks so very much. What I would like to tell you is that, any kind of challenge like this calls in for innovation and creativity in managing that challenge. And I think the Indian retail and Indian organized retail in malls have really risen up to that challenge. The last 2 years has seen the following things by the retail fraternity. One is a very quick adaptation to technology, be it in quick checkouts, which is digital, be it in great fitting room innovations, be it in also the way the displays are done, where there is minimal touch and a lot more engagement. And last but not the least is the rise of the personal shopper. So all these things made sure that people really got engaged with the brand in a way far more than what they used to. When it came to the malls business, the malls rose to the occasion and really looked at adapting technology on one side to ensure safety. But on the other hand, also we looked at how do we create an environment which is sustained in the long run by having a very good mix of strong brands which can sustain impacts of this nature and yet be able to give the best of products to the consumer and experience to the consumer. Along with that, we also looked at encouraging smaller retailers. Sustainability is a very big, not just a buzzword, it's a way the millennials are shopping these days. So we, in fact, incubated a series of small brands, homegrown brands in our properties through weekend markets or through pop-ups to ensure that, the smaller brands also get a chance to come out there to showcase what is great and really skew their market towards the millennials. So I think what's really happened is that people have innovated, malls as well as retailers. And the result is here to say that in the month of December last year, we had already crossed 98% of pre-COVID sales. And this March is also looking promising in spite of an Omicron challenge in January. So retail is really bouncing back, taking the challenge of these waves of COVID and semi-lockdowns. And really consumers are understanding what they want to come to the malls for a touch and feel experience and what is it that they want to shop online.
Yes. You summed it up well, Pushpa. Mohit, your thoughts on the same?
Yes, Sudhakar, thank you. I would say that there are broadly 4 areas where we've learned to work on in the last 2 odd years. when the COVID first wave hit us, I think, and I speak for the entire industry, we learned to be agile like we've never been before. That wave was, of course, marked with a lot of uncertainty, a lot of local restrictions, and our ability to react fast came into play. Also, like you mentioned, because the supply chain was so disrupted, we had to find new ways to ensure that we didn't run out of stocks. I think the second thing very clearly is we've learned to become extremely efficient. I think before COVID, we thought we were efficient. COVID has clearly told us that, efficiency has absolutely no limits. That was really at the beginning of COVID. After that, very clearly, we've all learned to become omni-channel retailers. And I think that journey has been an interesting one with a lot of learnings. Learning to see the consumer as she goes across channels is not an easy path, but I think some of the best retailers have been able to do that. And it's great for business because it really sweats the brand across channels. It's great for consumers because if they like a brand and are loyal to it, they're able to experience the brand across different channels, and so on and so forth. And I think the fourth real pillar now, which may be surprising to some people, is expansion. It may surprise some people that in the last year, physical retail, and I'm speaking for my industry, has never had such growth that it has had in the last year. And and it's amazing when you think about it that you've been through 2 COVID waves, yet this industry in a single year has expanded the most, its footprint. And I think it's a combination of what I said earlier, which is confidence in the model, efficiency, understanding how you treat your consumer in an omni-channel way, and using the environment to expand. The flip side, of course, is the best time to expand, because commercial real estate, and I'm sure Pushpa will bear me out, is probably at its best rates. And, I don't know how long we will see this, but as an industry, I think the big retailers have all pushed the accelerator on that. And it goes beyond food and grocery. You're seeing the same thing in apparel. And, so I think these are the 4 things I would say. First wave, we learned to be agile, more efficient. Then we developed omni-channel capabilities. And now with that confidence, I think as an industry, we push the accelerator for expansion.
It's interesting, Mohit, you mentioned there is growth, which might sound a little counterintuitive. But do you see, in China, there is this phenomenon, after the pandemic, which is called as revenge shopping. People who are struck during the pandemic, who are, who couldn't manage to come out, are coming with a vengeance in terms of, shopping. So I would say that might not be a case with grocery as such. But Pushpa, do you see that in luxury retail panning out? Because, the whole concept of revenge shopping is for the luxury brands and most of the high-end and premium brands which are there. So any thoughts on that, Pushpa?
Certainly. Sudhakar, what we saw is that luxury, of course, because the international travel was not there for the past 2 years, many new consumers came into our luxury properties in Emporio and Chanakya and experienced the brands. And to their great surprise, they realized that the brands were stocking the newest of merchandise, etc. Luxury shopping certainly got a boost. And we went well over pre-COVID sales, due to the revenge shopping phenomenon. But I wouldn't like to stop it just that. In fact, even in the premium malls, we saw that those customers, they chose brands who they trust. And that came through very clearly. The brands of trust and choice was clear. Categories were clear. Athleisure came up in a very big way as a way to be clothed and be current. So we saw certain categories do very, very well beyond pre-COVID. And, in a mall, the beauty is that even food and beverage is very much part of the whole bouquet. F&B, in spite of the 50% seating rule, in spite of delivery being one of the biggest elements, people started seeing sales well beyond 70-80% pre-COVID sales in spite of these, restrictions. What it came to show is that the consumers who were coming into the properties, they came in a very planned way. They all planned their shopping. So discover digitally and shop physically has become the mantra now going forward too. And it is very important for all of us in the malls industry as well as in the brands to really keep our digital presence extremely salient, because we are seeing a fantastic correlation between the two. And people plan their purchase. It's really nice to see queues outside a Gucci or an LV because they are planning and they know what they want. They seek appointments and they go in and make their luxury purchase or their premium purchase. So that's one change in the consumer that one sees. The other change that I also see is that, going forward to the personal shopping experience that is engaging with the customer one-to-one is here to stay. In fact, I think the COVID pandemic has got the customer in a very odd way closer to the brands of their choice, because people felt that, they will not be able to go out. There is no event happening. So how do I indulge myself? Today, as these lockdowns have been removed, and hopefully there are no more COVID waves, we are seeing the revenge shopping to just about start. So my prediction for this coming year is we're going to see some of the best summer that we've seen, and also the best winter sale is here for us to enjoy, because people would really come out in good numbers, not just for events and occasions, but also to ensure that each day of their lives, they max it with enjoyment. It's that customer sentiment that will be seen on the ground.
So, Mohit, it's interesting that you mentioned, the rates flattening out, for commercial real estate, which is anyhow, bad news for Pushpa, but good news for people like you, in a sense, in a sense, if you look at it, organized retail has had its onslaught from the online retail, right? The Amazons and Flipkarts of the world already, eating into the pie, which has already been a challenge. And this pandemic has been like the probably a last nail in the coffin might be a bad example, but I say it already strained the organized retail, right? Like grocers and all this stuff. So do you think this whole phenomenon of click and brick, and the omni-channel is now called as click and brick, right? So how do you cope up with that? Do you see a rapid adoption of the omni-channel retailing, or do you see online as more as a collaborator as such, or do you see it as competition?
No, I think, we have to recognize that the customer journey has evolved. And if retailers don't adapt and evolve and you ignore it, then you are simply anchored in the past. That's the simple truth. I don't think we think of ourselves as physical retailers or online retailers anymore. We think of ourselves as omni-channel retailers. What has changed is clearly the channel mix has changed. But if you look at our overall B2C basis, we are growing. And we are growing pre-COVID rates and fairly good growth. So I think the first is, how do you look at your business? So a pure play online retailer is not a different channel. I mean, we have a similar business model. I think the second piece is how will retail progress from here? And I think we are now at a very interesting time where we will see a lot of what's happening in China, where commerce will become a little bit more unified. India has these silos of, pure play e-commerce, offline, online. China has no such silos. In fact, Jack Ma calls it new retail. Their social, web, mobile, all of that has unified into one space. So the way we look at social media in India, where we will launch an app and go into it, and then we launch another app and do commerce. The Chinese consumer operates only in one ecosystem, and they transact, they do their social media, all of that. And I think that's a very, very exciting space, especially with the new cutting edge tech coming in, with VR and augmented reality. That space is going to get more and more interesting. So my answer to your question is very simple. I don't think of A channel, B channel as competition. I think we have to look at commerce becoming more unified. that is the manifestation of what's happened, and that's the future. And I think it's a very, very exciting future. The other part to this is, please follow the consumer. The consumer for my industry shops on what we call trip missions. And there are some trip missions for which one channel is more suited, and for another trip mission, another channel is suited. We have three pillars: price, convenience, and selection. Sometimes when you're buying big, obviously you want greater value, and a big box, large format works in your favor. When you want convenience, you may go to a Kirana or a Q-commerce. So follow the customer journey. It's clearly evolved, and we have to adapt to it. And I think we'll be okay if we do that.
So it's interesting, Mohit. This whole phenomenon has been when the organized retail started in India, there was a lot of hue and cry. It said that these large format stores or organized retail is going to take kiranas away, and then there is going to be mayhem in the market, which obviously didn't happen. I think the same thing is going to happen with now. I think you kind of begin to coexist. Online retail, offline retail will coexist in this whole thing. And when you are mentioning China, I think we are not too far off. We are also in the rat race of building one super app like the Tencents of the world. I think there are a lot of companies which are trying to ape the China model. I think Pushpa, you're trying to add something.
Yeah. So Sudhakar, I want to say that Mohit talked about the reduction in rates. Fortunately, the Delhi NCR market has not seen that. In fact, I can tell you on record that our rates have only gone up in the past year or so. It's gone northwards. And that's probably because, those organized retail properties, malls, which are in experiential retailing, which are invested in experiential retailing, those will definitely have a scenario where, consumers will choose those places because they now have a choice whether they want to shop online for a particular product or go to a mall and indulge in their shopping. So it's very important that if experiences are given and the retail experience is far superior, then such spaces are going to be preferred by the consumers, and hence the rates would be definitely higher in such pockets. We in DLF have seen that our rates have actually gone up, and we are commanding some 20% escalation from before, and we are actually getting it.
Sure, so that's good news to hear. Mohit, I want to ask you one question. If you look at the online retail, which has been funded by the large global investors, are sort of driving the market crazy. The whole unit economics and the market economics are going for a toss, and all these online retailers are bleeding big time, but still consisting with this. How do you face the challenge when your competitor is offering prices which are cutthroat at a loss? So how do you compete with that?
No, I think the first thing is that one must realize that these services are concentrated in very few cities, and some of them right now are still on pin codes. It's obvious that on a commercial basis, what is happening, a lot of it is very illogical. I mean, I've heard some horrendous numbers of transaction level EBITDAs at -20, -30%. So obviously not tenable. It's a race to get orders going, etc. The only word of caution, having been in grocery retail for 15, 16 years now, I'll tell them is that this is it's a brutal industry with very, very thin margins. And, to play on top of that, you're going to sandwich yourself and put pressure on your P&L has not been seen in other industries, which, for instance, lifestyle categories. Grocery is brutally, efficient industry. As with all things, I think it will go through its natural cycle and settle down. I mean, my industry is about 15, 16 years old. We started in 2005, 2006, 4 or 5 big banners. And I think we went through a lot of what is going on in e-commerce in a different avatar in the formative years. And we did it too, as we discovered our models and as we discovered our consumers. And I think they will go through the same. I think with a little bit more pain than they have imagined, and then settle down.
Well, I think grocery retail is one of the industries where the margins are really wafer thin. And if you look at the top lines and bottom lines of these online grocers, I'm not too sure whether they will continue in the coming future. So I might be a pessimist or so. If you look at a lot of startups in the space, you see a lot of doom that's happening in the coming years. But unfortunately, what really happens is that it really changes the dynamics of the market, and it kind of disrupts the economics of the market, which are not really sustainable.
No, true. I mean, we today, sitting here, we've forgotten that e-commerce itself, pure play e-commerce and grocery retail is only 7-8 years old. And if you remember some of those brands which started this journey, I think just about 2 or 3 of them remain. The rest of them all folded up. So very similar to, a possible future for what's happening right now. End of the day, grocery retail is about penetration. It's very, very simple. You cannot carry grocery across hundreds of kilometers, unlike you can carry other categories. So penetration is key. You need local presence, whichever channel you operate. It's simple. And to get that level of penetration and operate locally, you need to have capability, and you need to have a business model which works. Imagine, I mean, without taking names, if there is a Q-commerce operator today who's operating out of 6 or 8 cities, as a retailer, we operate out of 250 plus cities as we speak. And they're probably hemorrhaging huge losses right now. Now, would you be able to take that 8 to 100, much less 250? The answer is no. Very clearly, answer is no. What will come in the way, of course, is huge amount of loss funding and your ability to scale. It's very different to scale in a few centers versus a huge national presence. That capability, operational capability, takes a lot of time.
No, I remember in the early days of internet technologies, Webware in the US, supposedly one of the largest grocers gone bust in no time, burning billions of dollars. I wish that doesn't happen in India, but I'm sure with the unit economics and the whole fundamentals of business, whether it is online, offline, or anything like that, the fundamentals of the business still remain the same. But I think in this large euphoria of growing the market, I think the fundamentals are going for a toss, and I see casualties emerging with the way a lot of these startups are doing a 10-minute delivery, 15-minute delivery, delivery with no charges.
No, absolutely. And sorry, just to add on to that, I think the other difference between US and India and China is that 70% of what we sell is dictated by a MRP. So that's your ceiling. You can't really charge for convenience beyond a point of time in India because, you're limited by the maximum retail price of the product. So that will put additional pressure in India.
So it's interesting. You mentioned MRP, which I want to circle back to the point where I think the legislation and the rules of the game in sort of different between the online and offline, where in online you cannot have a multi-brand FDI is allowed in the thing. So it's sort of a gray area, right? No, so how do you see that panning out in the near future?
No, the government legislation on FDI and multi-brand retail is very clear. We already have one large retailer who is compliant to that and invested in India. Of course, it's a relatively tough policy, but the rules are very, very clear. And, if you want to participate, in a sense, India is open.
So Pushpa, your thoughts on the same, because I think the whole online thing is important for you, and if government opens up.
So what we have seen is, interestingly, fashion brands today are the ones who are already in the private label brands, be it an H&M or a Zara or Uniqlo. They are expanding their categories. So people are coming in with home category, etc. So that's one trend that we are seeing going forward, because they're looking at customer acquisition and they have a fantastic lineup. When it comes to the legislation, what See, the FDI rules are extremely clear, and like Mohit rightly said, one person is compliant, the others have not really looked at India, because the multi-brand business is tough. Let's really look at what's happening globally in the multi-brand business. Most of the department stores are struggling, and most of them are facing issues in their domestic markets. So for them to come across internationally would not be, I think, the right thing. And that's the reason. It's not because of the government legislation. It's because they have their own woes to attend to before they look at international expansion into markets like India. But when I look at other brands, which are deep private labels, they're the ones who are coming in. And in the sports space, we have brands like Decathlon. In the fashion space, we have multiple of them that I just spoke about. And there are a few more which are in the lineup. So I think, in the offline space, we will see that the trend will continue for private labels and, single brands rather than multi-brands.
Sure, Pushpa. After this whole pandemic thing, there is a tectonic shift in the consumer behavior. The whole digital has really taken off in a big way, which sort of, I think we, thanks to the pandemic, we had a huge jump in the curve. So in the new reality where people, are comfortable transacting digitally, online or so as a retailer, so how do you cope up, or are you ramping up your infrastructure in terms of the IT or so? Your thoughts, both Pushpa and Mohit, on that.
So I think even in the mall space, digitization is here to stay. UPI, people are preferring UPI payment. People are preferring, looking at scanning the menus as well as payment through barcodes. I think those elements are here to stay. The consumer shift is pretty clear. How are we coping with it? Well, we went into way before the COVID pandemic struck. We actually looked at launching a unified app called Lookout. And the Lookout, looked at shop safe and safe shopping experiences within the app, which helped us a lot during the pandemic. Going forward, we're going to be using that app much more for probably elements of staying current with the consumer, because it's our first direct B2C app that we have launched, and we have a direct connect to the consumer. So here we would look at enhancing our direct consumer experience through looking at the latest fashions, the lookbooks, etc., etc. That's the route it will take. We would not look at an e-commerce route at all. However, we would also look at loyalty as a big route. In our experience of, digitizing, a loyalty program is going to be completely digital going forward for DLF and many other mall operators. So that's one digital aspect that we see. The second is that I think digitization is really in the brick and mortar space about creating a smart mall. How do we make it more efficient? How do I create dashboards which are live? It's, what e-commerce really has is that it's got live data, and you're able to sort of cull in that live data very effectively. We are really investing a lot, and so are the other developers, in actually looking at digitizing the backend operations, be it our electricity, be it our common area maintenance, be it our, in fact, most of the customer connect that you see, the backend element of it is what is getting digitized as we speak. And so that is going to increase efficiency, reduce manpower, and improve the customer experience.
Yes, thanks, Pushpa. So yes, Mohit, your thoughts on the adoption, Mohit?
Yeah, so I think the digital transformation in retail is real and it's big. There are many facets to it, and I'll quickly try and summarize. The first, of course, is carrying or developing an omni-channel experience. I've spoken about it earlier, and I think it's quite self-explanatory. The second one is today, like never before, we are using data analytics, we are using ML to inform major business decisions. We are also using technology to improve our processes. A simple example I can share with you is A majority of our trade invoices are now paid by bots, which used to be a human till 2 or 3 years back. Pricing decisions are used looking at technology. So technology is impacting core processes as well as the consumer side. I think the third piece is we are also looking at the future very carefully. Like I said earlier, both AI, augmented reality, VR. Some of the leading international retailers have already started creating stores based on VR. You would have seen H&M is one example, and I think that clearly is the future. So both from the consumer's perspective as well as being more efficient in how we conduct our business, take our key business decisions, technology across the value chain is impacting our business like never before. And I must admit that COVID had nudged us while this was a natural journey and evolution, and you have to do it to build scale. You can't continue to keep legacy processes beyond a point of time. But I like to think that COVID has accelerated that journey as well as the adoption.
So on a lighter note, Mohit, do we see a more and a DLF in the metaverse? Going ahead over the whole augmented reality and virtual reality. So
yeah. I can give you one prediction that grocery retail will probably come in last on the metaverse. That is for sure.
I always wonder when you hear these concepts like metaverse and all this stuff. I wonder, there are. I mean, to be fair, there are certain categories which are prone to that, but I would say the hardcore grocers and all, and the food we eat, for example, we have to eat it, and there is no augmented reality and virtual reality in that as well. So I think so. I think retail is one of the key drivers of the Indian economy in terms of employment, in terms of its contribution to the GDP. So I believe the retail as a sector should do well for us to reach the 5 trillion economy that we are all hoping and the drive of our Prime Minister. So thank you very much, Mohit and Pushpa, for having this wonderful conversation and enlightening us on the new age retail and how retail is coping up with the new normal.
Absolutely.
Thank you,
Pleasure.
Thank you.
What a wonderful discussion that was. To add some more perspective to that, please allow me to welcome our markets editor, Shalin Agarwal, for a one-on-one conversation with Devendra Chawla, CEO and MD, Spencer's Retail, Nature's Basket. Over to you, Shalin.
Hello and welcome, everyone. Today we have with us Devendra Chawla, MD and CEO of Spencer's Retail and Nature's Basket. Devendra, thank you very much for joining us.
Thank you so much.
Devendra, we'll begin with what kind of shifts in the consumer behavior have you seen when it comes to buying the kind of products over the last 2 years during the pandemic?
Yeah. So very interesting question. And over the last 2 years, we've seen a lot of shift in consumer behavior in what people buy, how they consume, how they use. And first of all, given that health was important, I think a clear shift we saw was customers going back to the roots. And while we waited, if you remember in the early 2020 or that year, while we waited for the cure of the virus, we went back to our age-old proven repository of knowledge, and we also sought homemade remedies to boost our immunity. And this word immunity just became the most important word probably in the last 2 years, especially in the first year. But we believe consumers will continue this habit. It's not something which will just go away because the pandemic will come down or it will become an endemic or if this wave 3 subsides. And so brands must identify relevant shift, bring convenience and work towards product that will marry regularly consumed food with these principles. So you're not like taking tablets or feeling that to build immunity, you have to take medicine. So I think if you mix things which increase immunity ingredients with food and consume it, I think that's the way to go. That's the one big trend which we saw. Second is branding of commodities. I think there's a saying, they say that we live in a world where we are what we eat. So people really want to know what are they eating. And you'll suddenly be surprised to know that the back of the pack became the new front of the pack. People picking up the product in the store and reading the back side of the pack. What is the nutritional value? Which is source of information? What composition? And I think there's big learning that for businesses, then it becomes very necessary and important to provide these cues to the consumers and assist them in decision making on what they are buying. And branding, signifies hygiene, safety standards, and in a way brings credibility to the source of the commodities in a pack. And we've seen that in categories from atta to even poha. Third big trend which we saw is outsourcing to insourcing. I think consumers at least partially have replaced discovering destinations until travel picks up, which I'm hoping it will now, with discovering talent. And a lot of people became home chef, manicurist. These activities require a lot of preparation. So brands actually, these became like, I coined a term called PaaS, product as a service. Rather than buying a product, you make it into a service, or make the whole service as a product and bring it home, like pedicure sets, epilators, restaurant style sauces for home cooking, for the final cooking, pre-cut vegetables, the whole recipe ready kits to address this negative labor. Because people don't want to spend the negative time in just chopping vegetable. They want it cut, pre-cut, ready, so they can just be the chef and do the final cooking. I think these trends will continue. Another one we saw is digital care. I'm sure everybody, on the conference will also, agree with this, and it would have touched their lives that when reunions became Zoom parties and connections became contactless, and social distancing, brings, distant learning. So it's the mobile that let us live our lives digitally, and also in a manner, because you could do a lot on mobile, like telemedicine or continuing to work from home, or even doing your, Zoom meetings with your alumni friends. I think in a way the mobile protected us. We didn't have to go out. So I call this digital care. And this ecosystem is further developing, if you see, in the form of more digital penetration, more adoption, whether it be fintech or buying online, working, interacting, entertaining, telemedicine, everything has moved digital, and this is not going back. Some of these behaviors will remain in our personal and professional space. For example, gaming habits digitally, or entertainment on the phone, or watching, probably some of these OTTs, or even on mobile, on the move. And another big trend we saw is point of sale financing services, which we popularly call buy now, pay later. They have grown significantly over the last 18 months. And trends fueling the growth are digitization, rising merchant adoption, increasing repeat usage among younger consumers, and an expanding set of players, brands targeting, lending at point of sale, especially new age fintech companies. I think this will continue in the coming time. So some of the habits we acquired may go back to normal, but some of these trends which I'm speaking of actually may even continue even when this pandemic is over.
If I understand it correctly, these are all value-added products or value-added services. So for example, pre-cut vegetables, there is an effort that goes on at the seller's end or at the producer's end. Does it also mean higher margins for the companies in these such cases?
Yes, absolutely. The more you add value, and the more from a commodity you add something and do a plus, the more you're able to charge a premium, and your gross margins will keep going up. So that is why staples as basic commodities have lesser margin. And the more you process it and convert it into a finished good, or keep adding more and more value, the price goes up and the gross margin goes up. Absolutely.
So the shift that has come due to pandemic has in a way given a permanent avenue for FMCG companies and the retailers to increase their margins. Am I to understand that?
Absolutely. So if you see in commodity side, the fact that people are buying more from loose to packaged, packaged obviously commands more margin than loose. However, this is a phenomena which is happening, but at the same time, if inflation picks up and margins come under pressure, there'll be some balancing. But not to take away from the point that the more consumers move from loose to packaged food, companies' margins go up. And this is a phenomena which was anyway happening from decades. But in the pandemic, it happened faster. Like digital adoption was anyway happening, became faster. Same way, adoption from loose to packaged was anyway happening at a slower pace, but the pandemic made it adoption much faster. Absolutely.
Let's talk about the channels of sales. As you said that adoption of digital became faster in amid pandemic. How have you seen the shift from a single channel of sale to multi-channels of sale or omni-channel across retail chain?
Yeah, very interesting. So if we see from a brand's perspective, all channels may not matter equally. And that's because each organization have their own unique capability, competency, source of competitive advantage. But if you see from a consumer's perspective, all channels have a role to play in her life. So if you will go by a few studies, you will find that consumer uses 7 to 8 platforms or different channel or vendors for meeting their monthly requirement. It could be a neighborhood kirana store, it could be hawkers, e-commerce, modern trade, platforms, phone delivery, or now even D2C, which is direct to consumer. So for consumers, each channel brings a different set of utility and benefits for them. Businesses are expected to be available to consumers in their desired manner, anywhere and anytime. I could be busy, can't come to the store, may want to order on the app from the car, or early morning, I may just want to make a telephone call and get it on order, or on a WhatsApp, or I want to have an experience and see what's new, or I have leisure time, I may want to come and spend even more time in a store. So I think the same consumer is using many channels to interact with the same product or the same company. And an omni-channel strategy eliminates the silos and helps maintain this interwoven consumer experience I'm talking about, and offers a continuous and seamless experience. And this, to my mind, is the biggest challenge for companies and retailers. But still, several brands are not able to go the full distance of being truly omni-channel, and have just, I would say, graduated to multi-channel from a previous single channel. Like I was only, earlier you could only come to the store. Now I will deliver you at home if you make it only a telephone call, but they may not have an app, or they may not have a WhatsApp connect, or like in our case, we actually had 7 to 8 ways to connect. And I'll give you a situation also. In an ideal world, a consumer while browsing a social app sees an ad. Suppose you click on the ad, it takes you to the social media page of the product or the brand, or let's say the website, where the consumer can check out the product and place an order. But then the consumers find that the preferred size, let's say, for example, I'll make it up shoes, that size is not available. Then what happens? Then will the app or the website say, okay, I don't have the product available right now, but in a nearest store, 1 kilometer from your place, we have a store where the size is available. Or if you were actually browsing a store next to your place, it says, I don't have it in the store, but I'll ship it to you online. I mean, are we able to do that? That is called stitching and giving the consumer a completely seamless experience. And imagine the consumer goes to the store, picks up the product, places a review of the product and experience on the social page of the company. And that is the ideal situation. But it's not always the case. Sometimes the ad doesn't take you to the product rather than website, and you have to search for the product. Sometimes there are no virtual assistant to help you or guide you if you want to chat. Or it may not be able to tell the availability of the product at nearby store, or cannot reserve. Because it means a lot of data to be connected, inventory to be connected, to be able to give the consumer this seamless experience. And this is what I think is true omni-channel, and what it will take for brands or companies to give an omni-channel experience. And thus, it is of paramount importance that there is consistency in this experience for a consumer while they traverse from one channel to the other. And as a consumer's journey is not linear, and every consumer is different. So omni-channel helps to drive personalization and loyalty, which of course results in better business for retailers.
Sure. You said that this is a challenge, and some companies have not been able to do this seamlessly. If it's so obvious that you have to be present across channels for customers, then why is it a challenge for those companies, and why have they not been able to do it?
So while it's not good for me to speak on other companies, but I will tell you, this is all about mindset, and it's all about mindset. It is about speed of execution, of how quickly you can acknowledge and adapt that the world has moved. And will you wait for it to come back to like pre-pandemic if you think it will, or you will start act on it and put all channels, create a seamless multi-channel, omni-channel experience, so that wherever the consumer is tomorrow, like for example, we've had wave 1, then we had wave 2 in April 2021. Now in Jan, we had this wave 3 Omicron. Now all seems well, people are coming out, but suddenly I'm reading today morning that in China and Hong Kong, the cases are all-time high, right? So it's not as if the world is behaving very similar. It seems in some parts of the world when the wave is happening, in other parts it's not, and and vice versa. So have you seen an end of it? Don't know. So what is the best thing to do? The best thing to do is to acknowledge that consumers will continue to try new channels depending on the situation, and companies must make that shift. Again, as I said, I can't speak for others, but I think this is a necessity and everybody needs to make that shift.
So if I understand correctly, technology and agility have to play a very important role in this transformation. Is that right?
Oh, absolutely. And technology is actually the most essential lever to drive the success story. I mean, without technology, you can't have a truly omni-channel service. And for technology to make it happen, there are two critical elements to be addressed, and I'll speak on both of them. One is the single view of data. You see, in every company, there are a lot of MISs and reports. All managers will get some MIS. And if you're a buyer, you'll get your own data set. You would have built your own Excel sheets or report. If you're a store, you'll have your own reports. If you're a manufacturing location, you'll have your own data to see. Now, it's the same company, same product, but everybody's seeing a different data. I think it's time that there is a single view of data. And everybody in the organization needs to see exactly the same data. And that's what technology will do. Because if everybody in the organization does not understand it's the same consumer and why they buy what they buy, then I think that it can create silos. Second is single view of the customer. So SVOC. The earlier one was like SVOD, as we call it. And in
sorry, what are those terms? SVOC and SVOD?
So SVOD is the single view of data, and SVOC is single view of the customer.
Sure.
And in the single view of the customer, it's really simple. It's very critical for business to explore and pursue. It's like the same consumer when it comes to the store. We have 90 to 93% consumers' phone number. So when they buy, we put the phone number. So we know what you, in case, let's say you came to our store and you bought something. So I have the data that, let's say you bought X brand of noodles, Y brand of soft drink, and U brand of, let's say, atta. Now, and I know the pack size, the grammage. And when you buy online from our app, which most of our consumers do because of omni-channel, then we study the buying behavior, that what they're buying online, how is it different? Then they make a phone call. Then, of course, we have the phone number. So now you have multiple data sources. You have the same consumer coming to the store, the same consumer going online, the same consumer sometimes making a telephone call. For us, WhatsApp sales are also very large. So when we WhatsApp, we also get orders. Now you have to study what is the difference, because it all matters, that what pack sizes are you buying when you come to the store, and it's not so simple. There are differences, and when you view the consumer, you realize that what to push to the consumer in digital marketing on an app only will come out, or what you do in a newspaper advertisement will only come out if you understand the single view of the customer and when they're buying where. So this 360 degrees real-time view of the consumer with the help of whatever unique identifier, in our case, let's say a mobile number, or an email ID. And, this actually helps you personalize the communication, the content, the recommendation, and even the offering. You could know that this customer, out of the last 10 times, 8 times have bought, let's say, this brand of soft drink.
Sure.
And now last 2 times have not bought. Then immediately you can get a prompt and say, send an offer to that customer on the soft drink, so that you know that this is a regular consumption item in the family and why they have not bought. So you want to prompt it, or you try to give a small incentive. Now all that is actually data analytics, and I mean behind all this eventually is technology. So while I've spoken on omni-channel and technology, I think the single view of data and single view of customer on the bedrock of technology, I think becomes very critical.
Among omnichannel sales, you earlier mentioned that there might be a few differences in the buying patterns of customers when they visit store versus when they buy online. Could you elaborate some of those differences?
So pack sizes, like, you will see whenever there's a game, there are more online orders. Whenever there's a, let's say, for example, an IPL, you will see a lot of chips and soft drink will be bundled together in online orders, because the person ordering is sometimes is into cricket. But when you see the same consumer coming to the store and buying, you may find one product and not the other. So after learning from that, we bundle this pack and you push it together on the app. And 5 days before the game, actually the sales shoot up. Same we've seen for Diwali, the pack sizes, or even mithais, what you buy online and what you buy online. Indian mithais are more sold in store, and let's say chocolates are more picked up online. So you know where to promote what, or which content to create for what. So very peculiar differences come out.
How have the last 2 years affected the supply chains, and what do you need to do to boost supply chains further?
So I think supply chains truly got broken globally, and though we've traveled a long distance from a delivery in a week time to now same day, and now people are even talking about delivering in 10 minutes or half an hour. I think today's hyper complex supply chain environment, I think risks are evolving at a truly compounding pace and can strike practically any course, like what the COVID-19 or the pandemic did. And this may not be the last one. It may not be a health thing, but supply chain disruptions will come. So what is supply chain facing today? What are the challenges? I think one is a more uncertain world. And second, it is a rising complexity in terms of scale, geography, assortment, range, regulatory, and consumers or their own customers' evolving demand and whatnot. So supply chain earlier, and I used to be the head of supply chain in one of the FMCG companies earlier. I think at that time, it was all about network balancing and network optimization, where cost was core to decision making, that at lowest cost of delivery, optimize for cost, from which plant you'll ship to which area, least travel time, and least cost, even while buying ingredients. And that was the core task of supply chain managers, to design the network chain, and procure with lowest cost lever in mind. But I think the pandemic has changed all that, and their new variable has come. We still keep reading about semiconductor issues for auto companies globally. It's been 2 years, it's like still there. And going forward, the rules of the game will be to pursue thus both variables, one on the cost side, and the second is the risk reduction of availability of the product. If you develop a supply chain for the least cost, but the product is not available, then that's going to be a problem for production. So I think looking into the future, it's about resiliency and an ability to adapt to changes in the marketplace, in the new business model. And I think that would be a key to disruption proofing supply chain, which can be created by embracing few critical levers. And I'll just mention some of them. I think integrate your whole supply chain network end to end, so everybody can see the whole chain and know what's happening. Second, ensure supply chain visibility to even your partners, wherever they are. Third, building an instant-driven team to tap evolving market demands. For example, when the pandemic hit, we never used to do this earlier, but we made a war room, and we hooked up with the FMCG company's war room, and we all could speak when the trucks are coming, and that made the job so much simpler. And I think you have to have multiple sources of even buying as a supply chain. And while you have to optimize for cost, you have to also marry that the risk has to be reduced for not availability. So I would say for supply chain, from only cost, it is now cost and risk of availability. That is what everybody needs to build in.
Devin, very quickly, we have to talk about the quick delivery, the new 10-minute delivery model. How do you think this will evolve, and is it actually something to watch out for?
So Shalin, I don't want to comment on it because that's like more what others do.
Sure. You don't have any plans across any of your channels to venture into a quick delivery model?
No, we deliver in 2 hours.
Mhm.
We deliver in 2 hours,
Sure,
between 2
sure,
and 3 hours. And
sure.
of course, see, stores are like a cultural hub. So people know the staff when they come. You'll be surprised that even you would know that many people have phone numbers of staff. And if they need anything urgently, they'll call and it just gets delivered. It is just that currently we believe that, 90-95% of the customers are very happy even if they get a delivery within 2 hours.
Thank you very much, Devendra, for
Thank
this
you so much.
lovely discussion.
Thank you so much, respected speakers. Moving on, our next panel will focus on alternative financing for MSMEs. Despite various efforts of the government and private sector, the MSME credit gap in India stands at a whopping $380 billion, according to WHO. However, with the rise of cash flow lending, traditional banks and new age financial technology players are reworking their business models to cater to the underserved MSMEs. Let's hear more about this panel and the speakers from our moderator, Sonal Khetrapal, editor SMEs at Financial Express Online. Sonal, over to you.
Thank you, Nikita, for introducing me. Good afternoon, ladies and gentlemen. Welcome to our panel on alternative financing for MSMEs. The MSME credit gap has remained significant in the country despite various government initiatives. As per an International Finance Corporation report, informal debt accounts for a whopping 84% of the credit supply to the sector, which primarily constitutes of money lenders, chit funds, non-institutional sources such as family and friends. One of the biggest reasons for this gap is that 90% of the sector is still informal in nature, depending largely on cash transactions, making it difficult for banks and institutional lenders to determine their creditworthiness. However, with rapid increase in digital payments and alternative data sets such as GST, income tax, alternative lending models are seeing a lot of traction, such as P2P lending, crowdfunding, co-lending, invoice discounting, supply chain financing, buy now, pay later. They're fast becoming a major source of capital for small businesses who otherwise would not have had the means to obtain bank loans. In this panel, we will discuss how lenders and new age non-banking financial institutions are leveraging these alternative lending models to serve the MSME sector. Without taking any more of your time, let me quickly introduce our distinguished panelists. They are, in alphabetical order, Mr. B. Shankar. He's a seasoned banker with a rich experience of more than 32 years in various capacities in State Bank of India. A postgraduate in management studies from FMS Banaras Hindu University, he joined SBI way back in 1988. Since then, he has worked at India's top lender in various capacities, such as Stressed Assets Management Group of SBI at Mumbai, Regional Manager in Warangal, Deputy General Manager of Nagpur, General Manager NCR Delhi, then GM Chennai South, amongst others. He is currently Chief General Manager SME and Supply Chain Finance at SBI Corporate Center in Mumbai and is responsible for the SME portfolio of the bank. Welcome, sir. Now we also have Mr. Mukesh Mohan Gupta, President of SME Representative Body, Chamber of Indian Micro, Small and Medium Enterprises, which represents over 1 lakh MSMEs in the country. Mr. Gupta is an SME entrepreneur too. They have recently launched an online portal, nodefaulters.com, for MSMEs to report delayed payment issues by their private or government buyers and also check the amount pending against these buyers to other MSMEs. He also sits on the board of a public sector bank, a Tata Group company, and many other government PSUs. He was also a member of the National Board of MSME, Ministry of Micro, Small and Medium Enterprises. Welcome, sir. And we also have Mr. Sachendra Nath. He is the Executive Chairman and Managing Director of Ugrow Capital. Prior to building Ugrow, he has been instrumental in building 2 insurance companies, a large asset management company and an NBFC. It was after 30 years of a professional career, he took the entrepreneurial leap with Ugrow, which was formerly known as Chokhani Securities, in 2018. He says his life mission, which we also see on his background, is to solve the unsolved. and to help close the credit gap for small businesses in India. Through U-Growth, he aims to serve 1 million small businesses and take 1% market share in the next few years. Welcome, everybody.
Thank you.
We may start with Mr. Gupta, who is representing the MSME sector in the panel, to give us an overview of the gaps alternative financing platforms are filling in for the sector. Where are these models helping the entrepreneurs, and what are the gaps that remain? Over to you, sir.
Yeah, thank you, Sanal. Thank you very much. And I suppose this is the very important subject which we have chosen for today's discussion. So what is the alternate finance? We should understand the alternate finance is which is outside of the purview of traditional finance. So traditional finance is the finance which is available through the banking channel to these MSMEs. But most of the time, the traditional finance by these banks are based on the balance sheet. The various ratios, the various parameters have been fixed up for the traditional finance, for the term loan, working capital, and all those things. But we have seen that as you told rightly, that more than 95% of these MSMEs are deprived of the formal finance, the traditional finance. Hence, this mode of alternate finance came into existence. So the MSMEs which are not able to get the finance through this traditional mode by the banking channel, we can discuss what are the reasons, in fact, for these MSMEs not being able to get the finance from the formal finance or the traditional financing methodology. But yes, so as you were also mentioning rightly that various alternate financial models have been created, and NBFCs are playing very important role in that. To my surprise, I was discussing that these type of companies, in fact, they send their representative into चाट वाले की दुकान पर भेज देते हैं कि भैया देखो जरा कितने पत्ते बिक रहे हैं उनके आज शाम के, which is not possible in fact under the traditional finance, because in the traditional finance we see only the balance sheet of the company. पर alternate finance में वहां जाकर गिन लेंगे कि अच्छा सुबह से शाम तक ये तो 500 चाट के पत्ते बेच रहा है, 10 रुपए का एक हो गया तो 5000 रुपए की पर डे की इसकी टर्नओवर है. So various models have been created, like P2P funding is there. Invoice financing is very important in fact, because as you rightly told that we have created a portal called nodefaulters.com, and I understand that delayed payment to these MSMEs is one of the major problem being faced by these MSMEs. So invoice financing, and that too on trade platform where the invoice is discounting without recourse, that is also very important financing methodology being available to these MSMEs. Then unsecured loan, asset-based funding, peer-to-peer financing, crowdfunding, venture capital. These platforms have been created, in fact, majorly by the NBFCs, and they are definitely playing very important role, though the cost of interest, cost of funding may be a little higher under these alternate financing methodologies. But I suppose these small entrepreneurs are ready to pay most of the time higher rate of interest if the timely and adequate finance, I underline timely and adequate finance, is being made available to them. Even they are ready to pay slight higher rate of interest also. So these alternate financing products or the methodologies are really playing very important role in the growth of these MSMEs, particularly micro and small enterprises.
Thank you, sir. So that was a very comprehensive view of the entire alternative financing, platforms that are emerging in the country. Mr. Shankar, as you represent India's top lender, and we have seen, every day we see news of how, banks are now trying to look at innovative ways to finance this underserved segment. So before we move on to Mr. Nath, who is representing this new age sector here, so why don't you tell us a bit about, what are the innovative ways that, lenders like yourself are now looking at, addressing this gap?
Look here, Bangalore-based, I am a Bangalore-based study. One of the studies says that 94% of the MSMEs are unregistered with the government. And the credit market intervention, it's not benefiting these MSMEs. Now, yes, banking sector, especially State Bank of India, has been in MSME funding from the beginning. And we cater to the requirements of micro and small units especially, and more than 80% of our MSMEs we fund are micro units and small units. And the State Bank of India is the pioneer in funding the MSMEs. However, earlier it used to be traditional based lending. Now, under traditional lending, we can't bring all the MSMEs into the credit. We cannot make them available. So NBFCs used to play a major role in catering to the unstructured or unregistered MSMEs, and banking sector used to take care of the structured ones based on the balance sheet. Now the scenario has changed. The digital lending, automated processes have taken charge. Because of digital lending and because of the availability of various types of data, mainly GSTN based, foraying into MSME which do not have doable balance sheets, means structured balance sheets, they also can be catered into for credit dispensation. Now, we as the State Bank of India are foraying into, we are using mainly contactless lending platform to enable the customers, the MSMEs, apply for the loan. Now, our balance sheet funding has been our strength earlier. Now we are basing our MSME funding on cash flows. The value chain financing, the cash flows related data we are getting from the large corporates, and under the supply chain, we are going into vendor finance, dealer finance, and retailer finance. Under retailer finance, even small kirana shops are being considered. Now, one way of covering all the MSMEs is co-lending, which we found very useful. Like NBFCs are having some capital constraints. So, portfolio purchase and co-lending under DA model, these two will help release their capital, and then it will also help the banks to reach out to the customers, MSMEs, whom otherwise they would not have reached out. As you rightly mentioned, as Mr. Gupta ji mentioned, the new financial innovative products are coming into the market. Like now, crowdfunding. Crowdfunding has made the raising equity more democratic. Like Seed Invest, Funders Club, so many fintechs are there into this crowdfunding. Now, digital technology has helped that to transform the financial services industry. Micro lending platforms are also infusing debt funds. Like we see Lending Club, Prosper, such fintechs are there. These are the ones which are helping the MSMEs get debt fund also. Now, there are so many startups which are also in the MSME category. These startups, initially in the origination stage and the growth stage, they would require more of an equity. And after that, they will have the capacity to absorb the debt funding also. And we do have a policy for startups also. Now, unsecured lending is the main crux of the modern lending methods. In the unsecured lending, up to 2 crores, the CGTMSE guarantee cover is also available for the bankers. So, in fact, MSMEs should all take advantage of it, and they should be educated about the benefits they will that will accrue to them if they opt for CGTMSE guarantee cover, so that they can get credit, access to credit from banking system on the cash flow basis without offering any collateral security. Now, easy and faster credit access is being focused upon by the banking system. The credit processes, which used to be slightly complex earlier, are being made very easier. Now, the details which they used to furnish are being procured from the government sites. Increased use of digitization of getting data. At 75%, lesser manual data inputs are being focused upon, so that the productivity will go up, the time for turning around the proposals will reduce substantially, so that ease of borrowing will be given to the customers.
Okay, thank you, sir. That was, in fact, you have raised a lot of points, which I will come back to you, and discuss on the, the data sets and the unsecured loans bit after this. But let's first complete the first round with Mr. Nath. Hello, sir, can you give us, what is it that now you are with UGRO? What is, because I know that UGRO has been focusing on a very wide spectrum of alternative financing models, right? It's co-lending. You also have physical distribution channels. You're also looking at online. So what is it that, from a MSME perspective, what is it that is working for them? And where do you think, what is this journey that we need to cover in this space?
So thank you, Sonal. Thank you for inviting me on this very exemplary panel. And I never knew that Mr. Shankar actually is an alumni of my university. So actually, in fact, I've met him so many times, but first time I realized that he's from FMS BHU actually. So that which is obviously my home city and my university as well. So look, I think so. UGRO, as you know, that we were born with this mission to solve the problem of credit for MSME. And that was predominantly of my learning over a period of 25 years when I looked at from very small business, small city and towns. Generally, what I understood is that SMEs in India are non-homogeneous by nature. What I mean to say is that two different type of small businesses are different, but lenders are, homogeneous by nature. What I mean to say, if you go to a dentist and if you go to an IVF clinic, both being doctor, when the lender underwriting officer would meet with them, ask the same question. And the question can be standard saying, sir, how many OPD patients come to your door? Because, every, credit officer would believe the higher is the number of patients is higher the revenue, and it's a good doctor. But, to figure out and that for an IVF clinic, the number of patients in a month can be only 1 or 2, but the revenue is 10 lakh rupees versus for a dentist, it can be 1,000 patients, but not 10 lakh rupees of revenue. So this is what we call the non-homogeneous nature. What businesses which look very simple and very, similar are very dissimilar versus credit is very similar for everyone else, right? So it's a box approach. So that's why we said that we will first figure out a sector specialist approach wherein we selected 8 sectors, 100 subsector and micro enterprises, and said we will first learn different businesses and try to automate credit according to the business. Second, I think so. I keep saying this, that India is a point of inflection. It's a transformation wherein, it's a journey from collateral to cash flow. And see, the collateral-based lending was a necessity. आज से 5 साल पहले आप किसी छोटे बिजनेस के पास जाइए, उससे पूछिए भाई आपका रेवेन्यू बताइए, तो बोलेगा सब कच्चे में है. Then you ask him कि आप अपना एक्सपेंस बताइए, तो बोला मेरे घर का एक्सपेंस भी मेरे बैलेंस शीट में है. So as a lender, first you don't know the revenue, second you don't know the expense base, then you don't know the margin. तो फिर आप क्या बोलोगे, थक के बोलोगे भाई फिर प्रॉपर्टी दे दो. If I don't have your cash flow, then please give me the property. And that is going to change because, if you look at, this is what we call the bank's balance sheet approach, and actually it is changing. So Mr. Shankar is sitting over here. The State Bank of India has actually adopted our, cash flow based underwriting in totality, right? It was not an easy thing, but it has adopted. So today, if you in March 21st, if you did a 3 crore of PN balance sheet or a profit and loss account as an audited balance sheet, in February 22 it has no relevance, because by February 22, a lot of things would have changed. But what is changing now is our ability to look at 3 data, and these 3 data are not, going to Facebook and looking at alternative data is underwritable data, and we say there is a data tripod which is emerging: GST, banking, and bureau. So GST, as more formal the economy would become, GST gives you not only the real turnover analysis, but lot of underpinning things around that turnover. आप किसको बेचते हैं, काउंटर पार्टी कौन है, आपका कितने साइकिल में होता है. There are 400 plus parameter on GST you can analyze. Banking, which is, once the account aggregation would come in flow, would give you real cash flow analysis. What is your last 24 months or 12 months of cash, input of cash flow, outflow of cash flow, what is not business related cash flow, what is outside that, what is your debt obligation. And you can, at the time of credit giving, you can identify whether this customer can afford a 3 lakh rupee AMI or not. And once you corroborate that with GST, it can become very, very powerful tool. Third is the bureau footprint. So when we talk about bureau, generally people think of a 750, 650 score of CIBIL, right? That is consumer bureau. But a lot of people don't realize that there is 1,20,000 crore of bureau trade record for businesses itself. That gives business behavior. I may be an entrepreneur running a small business, having impeccable track record on my consumer bureau, but have a very poor track record on the business bureau because my business behavior is bad, right? So the combination of these 3 gives us the ability to do this alternative database underwriting and give the eligibility to the customer. Intent, eligibility, and ability, all 3 can be done through this. So now, and then obviously there is distribution and all of that. So this is changing, and obviously, NBFCs and fintechs are at the forefront of it, and banks are very extensively supporting it. Where the gap today is in 2 places, and both on the customer side. See, we are, as an NBFC, we are intermediaries, right? We don't have balance sheet power of a State Bank of India or a Union Bank or a Kotak or an ICICI, right? Because Hindustan में सब लोग हम लोग पैसे तो बैंक में ही जमा करते हैं ना, NBFC में तो नहीं करते. So the power of the capital is with the bank. So where the gap is, first is that the journey of banks to adopt 100% of this alternative is a 2 to 5 year journey, right? Because banks have a system of looking at things. They are also looking at, if they look at their MSME portfolio, every bank would have a gross NPA crossing 12 and 13%. So for a bank to actually believe that 12% doing through an NBFC would remain in under 2% is not something which we can prove it overnight, right? It would take some bit of time, right? Second is the customer. I think so the biggest problem is the customer also have to be ready to be in this system, right? 90% of customer today, when we ask GST as a compulsory input, they would say no. Now, 67% of our customer would not be willing to give our bank account. हमारे बनारस में कहावत है ना कि आप दाई से पेट नहीं छुपाते, right? When you are if you are pregnant and if you go to a doctor, you can't say I will hide my stomach, right? So that same way, when you are for a business to tell a lender that I will not give you an information, your starting point is bad. And this also comes from the fact that generally MSME have believed that lesser information provided is better for credit, but that has changed, and that as a behavior has to change.
Thank you, Mr. Nath. So this was very interesting. In fact, I'm gonna put you and Mr. Shankar on the spot after this. But first, I want to hear from Mr. Gupta on, a lot of Mr. Nath has raised some mindset issues from the MSME perspective, right? And in fact, at one of our earlier events, there were almost 5 to 6 questions from the audience that asked one thing, which was about why their application for unsecured loan from the bank still get rejected. So Mr. Gupta, so I mean, in that panel, there was a lot. Over and over, this is the question that has come up, and this is a problem that still remains despite all these innovative, practices that banks and NBFCs are adopting. So I would request you to address these 2 points, and then I would like to hear from Mr. Shankar and Mr. Nath on that.
Thank you, Sonal. A very relevant question. In fact, most of the MSMEs will be perhaps interested to understand कि हम बैंक गए, हमने कहा हमें CDT MSC जो एक स्कीम है सरकार की, जहां पर वी कैन गेट कोलेटरल फ्री लोन अप टू 2 crore रुपीज जाते हैं, बैंक वाले हमें वो मना कर देते हैं. Perhaps this is the question in fact most of the MSMEs have. I do agree that there are certain issues in the mindset of the bank officers also. Maybe some fear factor, maybe also there, providing the loan collateral free. But I advise them also that this collateral free loan is actually not a collateral free loan. The scheme CGT MSC is the scheme where somebody is giving guarantee, and that too a government organization is giving guarantee for the loan. But the problem is with the MSMEs also. Today morning also, I was discussing with somebody at 10 o'clock. What happened, in fact, in most of the balance sheet, we see that the ratios or the financial discipline is not required as per the banking norms. Most of the MSMEs, which I have seen. And then he was discussing, okay, if I give a collateral security, I told no, even if you give a collateral security, bank are not going to fund you. The problem in most of the balance sheet, और मैं advise करना चाहूँगा आपके इस important platform के द्वारा MSMEs के लिए, कि क्या होता है कि जो ये MSMEs हैं वो क्या करते हैं, जो डायरेक्टर्स का अनसिक्योर्ड लोन पैसा दिखा देंगे. बैंक्स जब देखते हैं तो बैंक समझते हैं कि भाई ये तो आपने लोन दिया. When you are running a business, when you are investing your amount into the business, आप उसको अपनी कैपिटल में नहीं दिखाते. वो पता नहीं क्या उसका कंसेप्ट है, उसको लोन में दिखाएंगे, अनसिक्योर्ड लोन में दिखाएंगे. बैंक्स कंसीडर and have to consider them as an outside liability. वहां पर आपकी जो TOL, TNW, आपका जो नेटवर्थ है और जो आपके आउटसाइड लाइबिलिटीज है वो गड़बड़ हो जाती हैं. जब उनसे प्रॉफिट की बात करते हैं, कई बार हम कहते हैं कि प्रॉफिट दिखाते हैं 5 लाख रुपए और वो कहते हैं हमें 10 करोड़ रुपए का या 5 करोड़ रुपए का या 2 करोड़ रुपए का लोन दिला दीजिए. तो हम उनसे पूछते हैं कि आप तो इंटरेस्ट ही पे नहीं कर सकते, आप तो प्रॉफिट दिखा रहे हैं 2 लाख 3 लाख, बताइए इससे कैसे आप एकदम 5 करोड़ 2 करोड़ का लोन लेते, कितना बिजनेस बढ़ जाएगा, आप तो ये पे नहीं कर सकते. वो बताते नहीं साहब वो टैक्स देना पड़ता है. सो आई एडवाइज मोस्ट ऑफ द SMEs की, देखो मुझसे मिलने के बाद मैं ये कहता हूँ कि देखो मुझसे मिलने के बाद बाहर जाके आप ये कहोगे कि यार ये कहाँ बेकार में हम गलत आदमी के पास आ गए सवाल पूछने के लिए. बट व्हाट आई टेल देम कि देखो आप एक डॉक्टर के पास गए और डॉक्टर ने आपको देखा कि यू आर वेरी सीरियस और उन्होंने कहा कि आप कुछ नहीं करना जी, आपको आप गोली वोली लो और कोई प्रॉब्लम नहीं है, तो उसको मरना निश्चित है. लेकिन इफ द सर्जरी और द ऑपरेशन इज कंपलसरी, तो वहां बताना पड़ेगा कि दीज थिंग हैव टू बी डन. मैं समझता हूं कि आप अपने चैनल के द्वारा अगर इन MSMEs को थोड़ा ये भी हम अवेयर करें, as you will be aware that I have a YouTube channel called MSME Helpline. वहाँ पर हम कुछ अवेयर करना तो चाहते हैं, लोगों को बताना चाहते हैं कि भाई क्या आपको करना चाहिए, सक्सेस के क्या मंत्र हैं, कौन सी गवर्नमेंट स्कीम है. बट आई वुड लाइक टू एडवाइस हियर टू दीज MSMEs that financial discipline is very important. If your balance sheets are strengthened, अगर आपके जो फाइनेंशियल हैं वो ठीक है. मैं ऐसे समझता हूं कि अनसिक्योर्ड लोन के लिए बैंक्स भी ढूंढ रहे हैं, जैसे शंकर साहब ने भी कहा दैट स्टेट बैंक ऑफ इंडिया, नॉट ओनली स्टेट बैंक ऑफ इंडिया, आई सपोज आई डिस्कस डे एंड नाइट विद मेनी बैंकर्स, विद सिडबी एंड ऑल दोस थिंग. Yesterday also I was with MD Sidbi and we were discussing some new product to be launched by them. Everybody is concerned for financing to these micro, small and medium enterprises, and these, I suppose, this is the priority sector for the government, for Reserve Bank of India, for the banks also, because the profitability of the banks lies on these MSMEs also, because they can charge higher rate of interest from these MSMEs as compared to large corporate. But yes, it's a two-way process. Teamwork. So these MSMEs have to strengthen their balance sheet. उनको थोड़ा फाइनेंशियल डिसिप्लिन रखना होगा. मैं तो उनको बोलता हूँ कि आपके घर में अगर उन्होंने कहा कि मेरे पास इतना पैसा, हमने बोला आपके घर में अगर बोरियों में पैसा रखा है, इट इज ऑफ नो यूज फॉर अस. आपको ग्रोथ करनी है, उसका एक सिंपल तरीका है, जो भी आप काम कर रहे हैं, जैसे मिस्टर नाथ ने भी कहा कि भाई कोई बैलेंस शीट नहीं देना चाहता, कोई GST में रिटर्न फाइल नहीं करना चाहता, बिल्कुल सीधा सवाल, बिल्कुल सीधा जवाब कि अगर आपको ग्रोथ करनी है तो सब कुछ एक नंबर में करना होगा, भरपूर टैक्स देना होगा जितना बनता है, आलतू फालतू खर्चे डालना ये सब कुछ करना बंद करना होगा. बैंक बुक्स में अपनी जो कैपिटल है उसको आपको दिखाना होगा, ये अनसिक्योर्ड लोन ये करके कि हम बाद में इसको वापस ले जाएंगे. तो इफ यू आर नॉट कॉन्फिडेंट अबाउट योर बिजनेस, हाउ द बैंकर्स विल बी कॉन्फिडेंट अबाउट योर बिजनेस, क्योंकि वो तो दूर से देख रहे हैं आपके बिजनेस को. आप तो डे एंड नाइट आप अपने बिजनेस में लगे हैं. अगर आप ही को कॉन्फिडेंस नहीं, आप करें मैं तो अपने बिजनेस में ही अपने को ही लोन दे रहा हूँ, how you can run any business. So this is perhaps my advice, and I can ensure you to the viewers, to the listener, that bankers are ready to give you collateral free loan, barring some mindset, in fact, provided your balance sheet are strengthened and you maintain the proper financial discipline.
Thank you, Mr. Gupta. That was very interesting. But, one of the things that I've also heard a lot is around compliances. I mean, everyone's still very scared of, the inspectors coming and knocking their doors. So before we move on to Mr. Shankar, very quickly. Yes, Mr. Nath.
Just add something. So Mukesh ji, आपको मैं बताना चाहूँगा, हमने आज तक हमारी आउटस्टैंडिंग एसेट बुक इज 2600 करोड़. हमने क्वार्टर 2 क्वार्टर 3 के बीच में 1080 करोड़ लोन डिसबर्स किया. दिसंबर में हमने 440 करोड़ किया. हम किसी भी बोरोवर से उसकी बैलेंस शीट नहीं मांगते, हम उसका इनकम टैक्स रिटर्न भी नहीं मांगते. और आपको ये जान के और आपके सारे MSMEs को जान के होगा that this approach has been accepted by Mr. Shankar and State Bank of India, by Bank of Baroda, by IDBI, by Central Bank, by IOB, and now by Punjab and Sindh Bank, and we are starting with 3 more banks. So none of my co-lending partners are asking for the balance sheet of the business, right? We are doing predominantly the entire credit on this data tripod of GST Banking and Bureau, and the collateral decide the pricing of the loan. So if our data tripod says yes, and eligibility, if you are bringing a self-occupied residential property in a prime location, you can avail a loan as low as 8%, 9%. But if you want to do an unsecured up to 25 lakh, we'll do it at a 17%. So that's the first thing. So this is the change which is happening. Still, sir, you would be amazed to know that our login to disbursal rate is at a decimal 18%. So for a 2,500 crore of loan book, we have originated roughly around 10,000 crore worth of loans. We have a total customer base of 16,500, but we have logged in cases of almost 40,000 cases or 50,000 cases actually. Where the customers are failing is because of their poor behavior in multiple aspects. So for example, when we analyze the banking, check bounce is a parameter. If the banking and the bureau shows more than 4% of check bounce, it is a straight no. Why? Because if a check continuously bouncing in your current account, it means that behaviorally you don't have enough cash flows for paying to your either to your suppliers or to your customers or to your bank. Right? So hundreds of parameters which we have built in our analysis, which has got nothing to do with the balance sheet. You may have a 5 crore loss in your balance sheet, we don't care. But if you don't have residual cash flow coming in your bank account, which is equal to your EMI, we will say no. Right? You may have 20 crore profitability, but if your average banking balance is less than 1 lakh rupee, will not give you a loan. So that's what I'm saying. Behaviorally, this whole concept of go to a chartered accountant, get a very great balance sheet, and that balance sheet would go to a branch manager and somehow convince him, and because of that we'll get a loan, is going to be over. So that I think so MSMEs have to understand. I think so the time has come where you can't blame it to the banks. I'm telling you, Mr. Shankar is sitting over here, 5 of the largest bank in this country are not looking any balance sheet to lend to a MSME customer through you grow today.
No, but that, yeah, Mr. Nath, agree with you. But what I was trying to say that financial discipline, as you rightly check discounting, and all these things, in fact, taxation payment and profitability, ultimately, and so you are connecting it with the bank balance. So bank balance, naturally, if the profit will be there, if the cash flow is there, so that financial discipline has to be maintained. So we have to educate to these MSMEs कि भैया आपको भी पैसा लेना है तो पैसा देने के लिए तैयार है, लेकिन ये पैसा भी पब्लिक का है, तो ये पैसा तभी मिलेगा when you will be able to repay it, तभी दूसरों को मिलेगा और तभी आपको भी मिलेगा. So financial
discipline, ये जो concept है ना कि CGT MSME गारंटी इसलिए हमको पैसा मिलना चाहिए, सर वो गारंटी पहले तो 75% होती है, राइट? द सेकंड वो गारंटी हमारी कैप होती है 2 times to प्रीमियम. मैं 100 करोड़ का लोन करूंगा, 1% प्रीमियम पे करूंगा तो सिर्फ 2 करोड़ का लॉस कवर करता है CGT MSME. तो उसकी वजह से कोई लेंडर लोन नहीं देता है. लेंडर लोन देते हैं जब उनको लगता है पैसा वापस आने वाला है.
Lender का ही perspective सुनते हैं, Mr. Nath. Mr. Shankar, let's hear from you on, a lot of points have been raised about lenders. So let's hear your perspective on all of these things now.
See, there are 2 factors. One is unsecured, second is balance sheet. And the third factor also is there, that is showing the turnover in books. Now, for the banking sector, showing turnover in books is the most essential component. Unless an MSME shows in its books all the sales turnover, yes, we cannot finance. Mukesh is really right in his expression, but how we procure that is the question. Now, whether you you get that data through balance sheet? No. Now we are coming out of that balance sheet era. We are going into the database, alternative data sets that are available. What are the data sets? Like GSTN is there, bank statements are there, and ITR is there, bureau is there, so many other ways. And you need not ask the borrower also, you need not ask the MSME also to submit. It's all digitally procurable data sets. Now, on the basis of which you will assess the limits, and then now here, and there is a difference between an NBFC and bank. A banker has fund, a banker has surplus funds to lend. NBFC has got that capital constraint, as rightly pointed out, but NBFCs has got the reach out, which the bankers do not have. So, second thing is NBFCs have is the collection efficiency, collection mechanism. Now, if NBFCs and banks come together under partnership and then going for co-lending, the best of both the banking sector and NBFCs can be made available to the MSMEs. That is what is being done, attempted now. And this is the future. What I would say is, future is cash flow based lending, co-lending, and unsecured lending. Now, coming to unsecured lending, yes, banks are going into unsecured lending. Though in a variety of unsecured lending we can see. Vendor finance, हर एक MSME कहीं ना कहीं से किसी न किसी large corporate को supply करते रहते हैं. So they are the vendors for the large corporates. Now, so if we are focusing on vendor finance, now on vendor finance side, absolutely no balance sheet is required, nothing is required. Absolutely, data that is procured digitally or is utilized, and then no security absolutely is necessary. Totally unsecured. Even artisans are found to be manufacturing goods and then becoming vendor to the large corporates. Large corporates are taking that those goods, finished goods from them, and then selling into the market, utilizing their market connections and market presence. So this is in a way useful to the artisans also, and those artisans can be financed by us in a very big way. So that is one unsecured. Then invoice funding. Invoice funding is one of the best ways of unsecured funding. And what I propose is even TREDs. If all MSMEs get themselves registered in TREDs, absolutely all bankers will be falling for financing, because they will all be coming forward in a very big way to fund MSMEs and free their cash flows without any cumbersome processes. I said there is one more way of easy and faster credit. The best credit type is CGTMSE, which many MSMEs have still not got accustomed to. What I would say is a lot of education is required, a lot of making them aware. Awareness campaigns are required in the country to make everyone aware of what is the benefit of CGTMSE. Of course, it comes at a cost, but that cost is very, very nominal. And once banking sector enters this market, the rate of interest also will be affordable. So that's how all the MSMEs can afford to pay that cost which is required for getting a CGTMSE cover. Because for CGTMSE cover also they have to have a corpus. That corpus will come only by way of fee. Now, technology upgradation will make this unsecured loan very, very faster. Another thing is in the supply chain, the last link before the consumer link is the retail trade. Now retail trade up to 1 crore is also part of MSME. Now these retail traders are being funded by the banks in a very big way by entering into tie-ups with all the large corporates. This is also totally unsecured. No balance sheets are required, only on the basis of cash flows that are provided by, that are procured from GSTN. And then under the tie-up with the large corporates, like almost all the Kirana shops or all the retailers are engaged in multiple large corporate dealing, like HUL, like Tata's, like Reliance. Everyone will be selling the products of these corporates. Now we have tie-up with all these corporates and we are going into the digital, totally automated retail finance on unsecured basis, end-to-end digital. So this is the process in which we are trying to enter into the remotest areas of the country, because what I found in one study is 51% of the MSMEs are in rural areas and 49% are in urban sectors. So equal distribution of MSMEs are there in rural and urban areas. And we, as State Bank of India, we have a big presence in across the country in all rural and semi-urban, urban and metro areas. Like we have 24,269 branch network to enable smooth transactions for MSMEs, because they need some platform to do their day-to-day transactions. It's not just availability of credit which is important. Later on, it has to be maintained also. And apart from that, we have 64,000 plus ATMs and ADWMs, CDMs for cash deposit and cash withdrawals, which is very essential for them. And 18,600 PIN codes are being served by us. And 842 SME intensive branches are there with a very robust, dedicated SME team of 3,000 plus. So this is the team which we have developed over the years to cater to the requirements of MSMEs. Now, awareness has to be created amongst them to utilize the availability of finance from the banking sector, from the NBFCs, and then apply that to very without any cumbersome process, without going into any branch, because approaching a branch is also not necessary. Just go to the site, go to the CLP, contactless lending platform, where many bankers are already engaged with, and then apply a small application. Otherwise, even if some MSME goes to our SBI site, there all MSME products are there. You just apply there. It will be just a few information is required, that's all. And it will directly guide to the lead management system. And the lead management system is monitored very effectively in the bank. And that will go to the person concerned, official concerned for further processing. So processes are all already simplified, and further reimagining is being done in SBI to reduce the processing time also. And so that what happens is the reach, the ease to borrow and the ease to monitor will be provided to them.
Thank you. Thank you, Mr. Shankar. So in fact, you have very nicely outlined and also, explained the entire different products available under unsecured lending. Mr. Gupta, my last question to you would be, can you share, so now there are all of a sudden we see there are way too many products available under alternative financing models. So can you give us some use cases? As an MSME, it is just too much knowledge to even understand or look at the different products. So can you give us some examples on the use cases? कि अगर आप इस situation में हैं, तो maybe invoice discounting is better, or P2B lending is better in which situation, or crowdfunding, or from a loan from a co-lending model. थोड़ा सा इस बारे में आप थोड़ा सा बताइए MSME को।
तो देखिए, ये वैसे तो डिपेंड करता है कि आप किस तरह का बिजनेस कर रहे हैं। बट एज फार एज इनवॉइस फंडिंग इज आई सपोज इज ए वेरी गुड प्रोडक्ट। और जैसे शंकर साहब भी कह रहे थे कि वो चाहते हैं कि जितनी भी MSMEs हैं वो ट्रेड प्लेटफॉर्म पर अपना इनवॉइस अपलोड करें और जिससे वो सभी इनवॉइसेस को फंड कर सकें। बट यहाँ पर थोड़ी सी एक कैच है, एक थोड़ा सा एक इशू है, बिकॉज एज ऑन टुडे ऑन ट्रेड प्लेटफॉर्म ओनली दोज बायर्स आर मैंडेटेड टू बी रजिस्टर्ड जो या तो गवर्नमेंट PSUs हैं सेंट्रल गवर्नमेंट के, या फिर जिनकी टर्नओवर अगर प्राइवेट सेक्टर में है इज मोर देन 500 crore. The irony of the situation is that as on today, even all central PSUs and all private companies having turnover of more than 5 crore also have not been registered. और जिन लोगों ने रजिस्टर कर लिया है उनमें से भी बहुत सारी कंपनीज अभी ऐसी हैं जहां पर वो जो इनवॉइसेज हैं वो एक्सेप्ट नहीं कर रही हैं। यहाँ पर जो डीम्ड एक्सेप्टेंस का जो कंसेप्ट है, NESL इज आल्सो प्लेइंग परहैप्स वेरी इंपॉर्टेंट रोल इन फैक्ट, कि अगर वो कोई अपना डिफॉल्ट है वहाँ रजिस्टर कर देते हैं, 3 बार वो नोटिस भेजते हैं, अगर वो नोटिस का जवाब नहीं देते हैं तो इट हैज टू बी कंसिडर्ड एज डीम्ड पेमेंट, इन फैक्ट डीम्ड एक्सेप्टेंस। तो ये मैं ये कहूँगा कि जो गवर्नमेंट PSUs हैं उनसे अगर कोई MSME डील कर रहे हैं, जो उन कंपनी से डील कर रहे हैं जिनकी टर्नओवर 500 करोड़ से ज्यादा है, तो प्लीज आप ट्रेड प्लेटफॉर्म पे रजिस्टर कीजिए। इनवॉइस फंडिंग के लिए वहां पर जो रेट्स मिलते हैं, इफ द इनवॉइस इज एक्सेप्टेड, आई सपोज दिस इज द बेस्ट वे, बिकॉज द ब्यूटी ऑफ दिस प्रोडक्ट इज दैट इट इज विदाउट रिकोर्स। यानी आपका बिल एक बार इनवॉइस डिस्काउंट हो गया, उसके बाद आपका बायर पैसे दे या ना दे तब भी कोई प्रॉब्लम नहीं है, आपके पास दोबारा जो लेंडर है वो मांगने नहीं आएंगे, एंड दे बिड एंड दे ऑफर यू ए वेरी गुड रेट इन फैक्ट, बट दैट इज आल्सो बेस्ड ऑन द क्रेडिट रेटिंग ऑफ द बायर्स। इन फैक्ट देयर मे बी सम बायर्स जहां पर टर्नओवर भी 500 करोड़ से ज्यादा है, लेकिन उसके बाद भी परहैप्स बैंकर बेस्ड ऑन देयर क्रेडिट रेटिंग में नॉट बीन इंटरेस्टेड टू डिस्काउंट देयर invoices. The another thing, I suppose to get any financing, तो कोई भी फाइनेंस लेने के लिए बस बैंकर्स से, NBFC से, किसी भी ऑल्टरनेट फाइनेंस मेथड से अगर आपको लेनी है, तो मैं तो वही कहूंगा जैसे नाथ साहब ने और शंकर जी ने कहा कि फाइनेंशियल डिसिप्लिन, यानी आप अगर चेक कोई इशू कर रहे हैं तो आप देख लीजिएगा कि भैया पैसा ऐसा मान के मत करिए कि मेरा ये चेक एक कलेक्शन में गया है वहां से पैसा आ जाएगा, उसके अगेंस्ट में आप एक दिन होल्ड कर लीजिए। अपने जिसको भी आपको चेक देना उसको बोलिए सर मेरे बैंक में बैलेंस होगा, अपने अकाउंट डिपार्टमेंट में कहिए बैंक में क्लियर बैलेंस है तभी, क्योंकि अगर किसी दूसरे का चेक वापस आ गया उसका कोई आपको बेनिफिट नहीं मिलेगा कि साहब मेरा चेक इसलिए वापस गया क्योंकि मेरा जो चेक आना था वो भी वापस चला गया। तो आपके पास जो क्लियर बैलेंस हो, आप एक दिन बाद चेक दीजिएगा, उनको हाथ जोड़ के कहिएगा कि साहब आज पैसा नहीं है, कल की डेट का लीजिएगा, पोस्ट डेटेड चेक काटना बंद कर दीजिएगा। जो आपकी EMI है, चाहे वो हाउसिंग लोन की हो, व्हीकल की हो, उनको इंश्योर कीजिए कि 2 दिन पहले वो आपके बैंक में पैसा होना चाहिए। आपका जो GST की जो कंप्लायंसेस हैं, कंप्लायंसेस बहुत इजी हो गई हैं अभी, जो कंप्लायंसेस हैं उनको पूरा कीजिएगा। मैं समझता हूं कि अगर ये हम फाइनेंशियल डिसिप्लिन मेंटेन कर लें, और जैसे नाथ साहब या शंकर जी भी बता रहे थे कि भाई बैलेंस शीट भी नहीं मांगते, बट मेरा इसमें एक थोड़ा सा ये सजेशन है और ये मेरी शायद मेरे दिल में है कि वो बिजनेसेस जो अपने ये कंप्लायंसेस पूरी रखेंगे, जो बिजनेसेस अपना ये फाइनेंशियल डिसिप्लिन ठीक रखेंगे, मुझे कोई डाउट नहीं है कि जो उनकी बैलेंस शीट है वो कहीं स्ट्रेस में दिखाई देगी, उनकी बैलेंस शीट भी अच्छी रहेगी, उनकी प्रॉफिटेबिलिटी भी शायद सही रहेगी, क्योंकि अगर वो उनकी बिजनेस में प्रॉफिट नहीं हो रहा होगा तो दे विल फाइंड सम अदर मींस इन फैक्ट टू सी कि हम इसमें अब क्या करें, क्योंकि प्रॉफिट भी ऐसा है कि बहुत लॉस करते रहेंगे तब भी हम शायद एक समय ऐसा आएगा कि हम पैसा छाप तो नहीं पाएंगे और जो हमारे जो फाइनेंशियल ऑब्लिगेशन है वो शायद हम नहीं पे कर पाएंगे। तो वो बिजनेसेस जो कंप्लायंस में ठीक है, जो फाइनेंशियल डिसिप्लिन मेंटेन करते हैं, जो समझते हैं और जो अवेयर हैं, जैसे मैं आपको बताऊं जो अभी हमने जो अवेयरनेस सम वीडियोस में हम पोस्ट करते हैं, इनफैक्ट सम इंस्टीट्यूशन हैव कम टू आवर सपोर्ट इनफैक्ट, और उन्होंने हमसे कहा कि रीजनल लेवल पे बहुत प्रॉब्लम है, बिकॉज हम इंग्लिश है, हिंदी है, हम इनमें बात करते हैं, बट बहुत सारा जो हमारा जो कंट्री की पॉपुलेशन है, they are not able to understand. So now we have started posting videos in 5 more languages including Marathi, Tamil, Gujarati, बंगाली। सो इस तरह से अगर हम उनको अवेयर करें, सही तरह से बताएं हम उनको, तो मैं समझता हूं कि तरीका एक ही है। जो आपने पूछा कि क्या कौन सा प्रोडक्ट किसके लिए है, तो मैं इनवॉइस डिस्काउंटिंग के लिए तो मैं जरूर कहूंगा कि जो गवर्नमेंट डिपार्टमेंट से या बड़े लार्ज कॉर्पोरेट से उनके इनवॉइस डिस्काउंटिंग से इजी हो जाए, लेकिन इसके अलावा जो तरीका है वो एक ही है कि आप अपना फाइनेंशियल डिसिप्लिन ठीक रखिए। देखिए बैंक आपके पीछे पीछे भागे आ रहे हैं। आज जिस बैंक से आप बात करें, जिस NBFC से बात करें, लोगों ने दुकान सजा रखी है, अपनी डिजिटल प्लेटफॉर्म बना रखे हैं, पार्टनरशिप कर रहे हैं बैंक और एनबीएफसी के, भैया आओ मिलकर देते हैं, इसका मतलब क्या हुआ? कभी हमने देखा था ऐसा कि एनबीएफसी और बैंक मिलकर कह रहे हैं कि सर हम मिलकर देते हैं, हम बैलेंस शीट भी नहीं लेंगे, हम डेटा बस खाली डिजिटल करेंगे। बैंक्स कह रहे हैं एनबीएफसी को कि हम आप पे पूरा भरोसा करते हैं जो आपका डेटा है। इस जोश से जो बैंकिंग चैनल है, जो एनबीएफसी हैं, वो तैयार हैं इन एमएसएमईज की मदद करने के लिए। तरीका एक ही है, फाइनेंशियल डिसिप्लिन मेंटेन कीजिए, बैंक के पास जाइए, आपको शायद लोन मिलने में ज्यादा दिक्कत नहीं होगी।
Thank you, Mr. Gupta. Mr. Nath, my question to you would be, so Mr. Gupta has explained very nicely about, what products to access when, and and their own responsibility towards their own credit worthiness. But for you, I would like to ask you, there's so much of stress in the sector. So can alternative financing be used by stressed MSME accounts, and how?
I don't think so that a stress business is not eligible for debt, right? We have to all remember that.
But isn't that when they need it the most?
I understand, but look, we are all in fiduciary activity, right? So we are, as an NBFC, I have raised capital from, and I have to return that capital. I borrow money from the banks. I have to return the money to the banks. Bank have returned this money to finally end saving and a customer, right? So we are there to support a business, but we are not in a business to clear somebody's stress and put you as an stress. So Sonal, if you are in deposit, a saving account holder in the State Bank of India or any bank, can State Bank of India come and tell Sonal that I have supported a distressed SME, and because of it, your 10 lakh FD is now worth only 5 lakh rupees? We can't do that, right? That's not our job, right? So our job is to protect our customers, our stakeholders. If you have created a stress in your business, you have to find your own means, right? There is a government scheme of providing capital. You have to find source. And second, I think so, readjust. See, one of the problem of SME or for that business is we continue to believe, irrespective of our condition, we will continue to grow and succeed. But kabhi-kabhi to aapko line khichni hoti hai na. If you are in trouble, please, curtail your business, bring it down, shrink it, wait for some period of time, work harder, improve it, and then go back to the market. See, debt is not a solution for all the problem. Debt is provided to companies who have ability to grow and return that money. We are not in the business of providing and supporting stress.
One of the things that, I have also heard is, if a company is in stress, it can also be because one of the reasons also we have seen, and especially in the last 2 years of the pandemic, is payment delays have been there, orders nahi aa rahe, but it's a perfectly healthy business. But they have a lot of these working capital issues, jiski wajah se, they default on bank loans a lot of times. So do you think there's a need to differentiate that in this different defaults?
Banking, ma'am, I must very clearly, banking is not for that. So I think so Mr. Gupta has to go and figure out and let governments and other people put different type of capital structure. We cannot support that. At least I cannot.
May I add something to this, Sonal?
Yes, sir.
So I fully agree with what Mr. Nath was referring to. There are schemes, and recently there was a scheme being launched by Government of India, subordinate debt to stress assets. This loan was available to even NPA account. You will be surprised to know that a total outlay of 20,000 crore was earmarked for this scheme, and the actual disbursement is not even about 100 crore as far as I know. So even bankers are finding it difficult. To me, so what is the solution? देखिए, अगर मैं एक स्ट्रेस में हूँ और मैं स्ट्रेस में हूँ, स्ट्रेस नॉर्मली मेजरली होता है कि बिजनेस नहीं है, बिजनेस कम है, रेट ऑफ इंटरेस्ट मेरे ज्यादा हो गए हैं, मेरा पेमेंट नहीं आ रहा। अब मैं अगर लोन दे देता हूँ, हम कहते हैं बैंक को या मिस्टर नाथ को कि आप इनको लोन दे दीजिए, व्हाट विल हैपन अल्टीमेटली? स्ट्रेस विल इंक्रीज। जो स्ट्रेस है वो घटेगा नहीं उनका, बिकॉज इंटरेस्ट बर्डन विल इंक्रीज. बट वी एडवाइज इन फैक्ट टू दीज MSMEs, एंड आई वुड लाइक टू शेयर माय एडवाइस व्हिच मे नॉट बी लाइक्ड बाय मेनी ऑफ द MSMEs. हम उनको कहते हैं, देखिए आपका कोई एसेट है, आपका कोई एसेट ऐसा है कि जो आपको लग रहा है कि आप अभी यहाँ पे जगह आपकी बड़ी है क्योंकि स्ट्रेस हो गया है आपके बिजनेस में, आपके यहाँ पे पहले 200 एम्प्लॉइज थे, अब आपने वो घटा के 20 कर दिए, अरे भाई बेच दीजिए इसको, सेल कर दीजिए, एक रेंट पर ले लीजिए फॉर द टाइम भी, आपने यहीं से बनाया था दोबारा बना लेंगे। उस समय जो जरूरत है सोनल, उस समय जरूरत है डेट को थोड़ा कम करने की। यस, देयर विल बी सम बिजनेसेस जहां पर कुछ हैंड होल्डिंग की जरूरत है। मैं समझता हूं कि ऐसे हैंड होल्डिंग के लिए बैंक्स हैव द प्रोडक्ट, बैंक हैव द रीस्ट्रक्चरिंग फैसिलिटीज, बैंक हैव द सबऑर्डिनेट डेट फैसिलिटीज। बैंक अगर ये स्कीम नहीं भी है तब भी बैंक उनको मदद करते हैं, FITL करते हैं, वर्किंग कैपिटल टर्म लोन करते हैं। वो जो फैसिलिटीज हैं वो बैंकिंग चैनल के पास हैं। बट दीज स्ट्रेस एसेट्स हैव टू शोकेस कि ये प्रॉब्लम थी और जो मिटिगेशन है वो क्या हुआ, क्या उनके पास अब और ऑर्डर आ रहे हैं। अगर बैंक्स को ऐसा लगता है कि अभी चलिए किसी वजह से, मे बी बिकॉज ऑफ द पेंडेमिक सिचुएशन, मे बी बिकॉज ऑफ सम मैनेजरियल इश्यूज, मे बी सम डिलेड पेमेंट, मे बी सम इश्यूज ऑफ देयर बायर्स, मे बी सम इश्यूज ऑफ देयर लेबर, कुछ ऐसी प्रॉब्लम है विच नाउ दे हैव कम ओवर, और वो उनका ठीक हो गया, उनके पास अब ऑर्डर आ गए हैं, गवर्नमेंट के ऑर्डर आ गए, प्राइवेट कंपनीज के ऑर्डर आ गए हैं। नाउ दे कैन डू इट। परहैप्स bankers are ready to support these type of industries by way of restructuring, rescheduling. All those products are available. Perhaps Mr. Shankar will be able to guide us better.
Yeah, certainly. In fact, Sonal, ये आपका क्वेश्चन में ही थोड़ा सा चेंज करना पड़ेगा. Mr. Nath has replied on acquiring new asset. ठीक है, एक स्ट्रेस्ड एसेट को कोई एक्वायर नहीं करता है, ये तो पक्का है, क्योंकि ऑलरेडी एक स्ट्रेस में है. तो why should one acquire and then make it an NPA? And all the banks will be looking for exit only. अब रही बात, सवाल है कि कैसे उसको नर्स करें. ऑलरेडी मेरे पास है बुक्स में. देन यस, मुकेश जी जो एक्सप्लेन किया, बहुत बढ़िया एक्सप्लेन किया है. Restructuring is one option that is there. However, पैंडेमिक में जो भी अफेक्टेड है उनको रिस्ट्रक्चर ऑप्शन था. And all the MSMEs which actually require restructuring, they have availed of this benefit. And bankers इतना मन से किए हैं रिस्ट्रक्चरिंग सबको कि किसी को ना नहीं कहे. एक भी कंप्लेंट में नहीं देखा हूं जिसको रिस्ट्रक्चरिंग नहीं हुआ है. बल्कि मैं ये देखा हूं कि बहुत सारे लोग रिस्ट्रक्चरिंग के लिए ऑप्ट नहीं किए हैं, बिकॉज दे वांटेड टू सर्वाइव ऑन देयर ओन. क्यों? क्योंकि गवर्नमेंट ने एक फैसिलिटी दिया GECL फॉर पैंडेमिक, कमिंग आउट ऑफ द टेम्पोररी स्ट्रेस. अब जो टेम्पोररी स्ट्रेस में थे उनके लिए GECL 1, GECL 2, now 3 एक्सटेंशन भी आ गया. अभी नया 50,000 करोड़ और अनाउंस कर दिया, उसके लिए ऑपरेशनल गाइडलाइंस आने का बचा बाकी है. सो गवर्नमेंट इज डूइंग इट्स बिट and people are taking it. All MSMEs which are eligible and which require, they are taking GECL. And जो रिस्ट्रक्चरिंग के लिए जरूरत जिनको है वो सब आकर रिस्ट्रक्चरिंग करवा चुके हैं आपके अकाउंट्स, एंड वो स्टैंडर्ड भी है. सो नर्सिंग इज द मेन पर्पस ऑफ द बैंकर. बट किसी एक बैंक में अगर स्ट्रेस है कोई एसेट, वो दूसरा बैंक नहीं लेते. हाँ, रही सवाल सबऑर्डिनेटेड डेट का, यस करेक्ट, मुकेश जी सही बोले हैं. वी आर ऑल ऑफरिंग सबऑर्डिनेटेड डेट, बट टेकर्स आर नॉट. Takers are not there.
There are certain issues also with the scheme, sir. So we have also submitted to the government.
Yeah, so I have very limited point. You know, when you board a flight, the first announcement is that if oxygen is low, please first put mask onto yourself and then put your child, right? So, right, when we are as a lender boarding the flight, when it will, when there will be a problem, we'll first put mask to ourselves, no? Because if we don't do that and if we suffocate, everything suffocate. So my sincere request is that if your business is in a problem, then solve for it. Credit is not a solution to that.
Got it. Thanks a lot.
And before closing, I just want I to have some asks from the MSME customers.
Oh.
4 चीजें मुझे चाहिए. 4 चीजें सारे MSME कस्टमर से चाहिए. आपको परमिट करोगे तो मैं बता दूं?
बिल्कुल.
एक है कि यस, ऑल बैंक्स आर देयर टू लेंड. हम छोटे जो माइक्रो स्मॉल एंटरप्राइजेस जिसका बैलेंस शीट नहीं बन सकता है, उनके लिए ऑफ बैलेंस शीट कैश फ्लो बेस में देने के लिए तैयार है. अनसिक्योर्ड लोन्स जिसके पास कोलेटरल नहीं है, अनसिक्योर्ड लोन्स अप टू 2 crores दे रहे हैं, जिससे जो है ना सारे माइक्रो एंड स्मॉल एंटरप्राइजेस विल बी कवर्ड. एंड ये माइक्रो एंड स्मॉल मिला के 99% ऑफ आवर MSME हो जाते हैं. अब everyone has to come forward to avail of these benefits from banking system and NBFCs and microfinance institutions. Second, जिस एसेट के लिए हम दिए हैं उसी एसेट के लिए उपयोग करना है, डाइवर्शन नहीं करना है. Utilize for the purpose for which the loan is given. This is the second request to all the MSMEs. Very sincere request from a banker. Third, take full ownership of your MSME unit. Don't think that we are doing with bank's fund, our stake is only 25%. No, your stake is 150%, because you are responsible for the people working with you, for their livelihoods, for their family's livelihood. So they give 100% of your energy, your involvement to your unit. It's your own unit. It is not anybody else. And we are here to help you, support you for the lifetime. Third, fourth, final, repay on time. एक बार आप डिफॉल्ट करेंगे, आप इस लेंडिंग सिस्टम से, क्रेडिट सिस्टम से बाहर हो जाएंगे. आप ही नहीं बल्कि आपके generations ahead into the future will not be eligible for any credit from the banking system. Can you be responsible for this debacle? पूरा ही पूरा फैमिली डाउनफॉल के लिए आपके पास हक नहीं है. आप खुद के लिए आपके पास हक है, लेकिन फैमिली इज डिपेंडेंट ऑन यू, फ्यूचर जनरेशंस डिपेंड ऑन यू. सो repay loans on time, create a credit history, then banks are there with you during your to take partnership in your growth story. Bas. Thank you.
Thank you. Yes, it does need an applause, Mr. Shankar. So you have very beautifully also concluded this panel. So thanks a lot, everyone, for this insightful discussion. A lot of very important points were raised. Banks, lenders, NBFCs, everyone is there for you. The ecosystem is growing. Now the onus is on the MSMEs to show their credit worthiness and grasp this opportunity. Thanks a lot, everyone. It was a pleasure having you on board. Thank you.
Thank you. Thank you so
much.
Thank you.
Thank you very much, Sonal.
Thank you, our esteemed panelists, for sharing with our SME audience the paradigm shift that is happening in SME financing and how small businesses too need to up their ante and improve their credit worthiness to leverage the new age lending platforms. Before we move on, I want to thank each one of you who has taken time out to be with us today. Please show some love for the show on social media with the hashtag FE Boardroom 2022. Thanks to our presenting partner, Commerzify, for the support extended. As we head to a wrap up, we come to one of the most important decisions of the day. The upcoming decision focuses on the single most reason why 90% of the MSME sector is informal in nature. Yes, you got that right. It will discuss the issue of cumbersome and draconian laws in the country that are applicable to small businesses. The panel Ease of Doing Business will not only discuss the humongous compliance burden, but also offer policy recommendations and suggestions to boost the entrepreneurship ecosystem in the country. The moderator for this session is Mr. Padmanand V, partner at consulting firm Thornton, Bharat. Mr. Padmanand is a global expert on industrial and MSME sector and has over 20 years of experience in cluster value chain, entrepreneurship development, and in implementing development programs for the Indian government. His areas of expertise include economic development, government and infrastructure advisory, agribusiness, and public-private partnership-oriented interventions, among others. He's also worked in over 25 countries as an international expert for the UN organization. He has published over 10 books and has 2 MPhil degrees from the University of Cambridge and the Center for Research in New International Economic Order, and has also served as a member of Planning Commission, the Government of India. Mr. Padmanand, welcome to FE Boardroom, and may I request you to take over and introduce our speakers, please.
Good afternoon, I'm Padmanand from Thornton. We have 3 experts in the discussion today. this afternoon. And these experts are experts in the field of MSME sector, either in terms of counseling the sector. And in fact, all of them have been excellent startups, founders of their own enterprises and luminaries in their space. Now, the MSME sector, as we are all aware, contributes to about 6.3 crores in terms of enterprises in the economy, largely micro and small and medium following in numbers, providing employment to about 11 crore of the populace, meaning we could say about 40% of the livelihood of the Indian economy, the people in the Indian economy, is dependent on the MSME sector. But this MSME sector, we speak about factor conditions, we focus on competitiveness, we focus on policy, the budget, Nirmala Sitharaman ji. But one thing that has been not really highlighted is the compliance concerns of the MSME sector. So compliances may be in terms of the 7 more critical categories, most critical categories, many of them which are industry specific: labor, commercial issues, financial and taxation issues, environment, health and safety standard related issues, secretarial issues. So all these categories are basically, shall we say, coming under the compliance framework of several acts, related compliances and related filings. Now the related compliances itself number almost 70,000. And we understand that more than 1/3 of them have imprisonment clauses. Somehow our MSMEs that we interact with have not really complained much on this front, perhaps because they are handling the inspectors very well, as Rishi ji may explain. But the question is, are we still in the Inspector Raj? We speak about Make in India. We speak about developing India to be global value chain leaders in several commodities and value chains. But if the compliances are such that we have maybe about 26,000 compliances which have imprisonment clauses for the MSME doyens and leaders, it's a strained parody, I should say. So we will go on to the discussion without much ado. We have Dr. Satya Gupta, who is presently the chairman of the IESA, the Indian Electronics and Semiconductor Association. He has served with Intel, worked abroad for most of his life, now contributing towards the Indian ecosystem, the MSME, as well as the startup and the electronics and semiconductor ecosystem. We also have Raghunathan ji, who has been convener of the consortium of Indian associations. He has also been a pioneering startup with regard to solar energy. So I understand 1983, solar energy was something that we never used to speak about, renewable energy. He had pioneered and brought out the whole revolution in the nation. He has also been awarded the best small-scale industrialist by the President of India, and is presently leading the consortium of Indian associations as his contribution to the MSME ecosystem. We also have Rishi ji, another luminary who has, in fact, Rishi ji has been working abroad also for quite some time, from IIT and the IIM Education, Bank of New York, and for the last 6 to 7 years has been in India with his own startup providing services in terms of compliance related services for the MSMEs, more than 1,000 units being assisted, team leads RegTech. All the 3 speakers are highly educated from BITS Pilani, Dr. Satya Gupta, a PhD from Virginia also, Raghunathan ji from IIT, Rishi ji also from IIT. So we have technocrats. So I'm sure we could get a lot of inputs, not only advice and inputs for the SME, for startups, but also for the existing MSMEs. So let us start off the discussion, the conversation. We'll start off with Dr. Gupta initially, with specialization being in the area of electronics and semiconductors. So Dr. Gupta, the Indian economy, and of course, Honorable PM and the Ministry of MSME and Commerce and Industry have focused on trying to develop the electronic sector and the electronic manufacturing sector in India. There is a special scheme called Electronic Manufacturing Cluster Scheme, hundreds and thousands of crores being plowed into it for common facilities on PPP mode. But somehow or the other, the electronic sector has not evolved, I'm sure you would agree, to the extent desired, still largely into assembly, evolved into a field, evolved into the level of, say, a China or a Taiwan or a Korea. So we shall start with a brief conversation with you on and your inputs on why is it that the electronic sector has not really evolved despite the government of India's focus for the last several years, and has compliance a critical role also to play in this context. Over to you, Satyaji.
Thanks a lot for setting up the context of the panel nicely. Now, looking at the electronics sector and as a corollary, the semiconductor sector, actually, if we look at for pure manufacturing point of view, right, the schemes like EMC 2.0 and the PLI scheme, which was announced about 2 to 3 years back, right, I think they had a profound impact on the manufacturing, right? So today, if we take about $180 billion of electronics products which gets consumed in, let's say, 2021 numbers, right? About 50% of that is being manufactured in India, or a little more than that, right? So I think manufacturing, because of PLI and other things we have captured, is pretty well, right? And I think going forward, maybe we will reach to about 60 to 70%. The core issue in this sector is that although we are manufacturing, but the value addition which we are doing on a product is pretty low. Okay, that means it remains more of a surface level manufacturing where we are not basically contributing towards the design and the IP of the company. We are doing pure manufacturing for the global companies. And electronic sector, the manufacturing basically contributes somewhere around 8 to 10% if you take any product and do the BOM analysis. It is not like a steel or cement where manufacturing contributes like 40–50% of the basically thing. So electronics industry cannot be compared to those traditional industry. Here the value addition comes from the components, the IP, design, and all of those things, right? So we have not been able to make much progress on those fronts. All the pure numbers for the manufacturing looks fantastic, which is needed to create a baseline. Now, in terms of EMC and compliances, right? So on the first point is that if you want depth in manufacturing in electronics, right, we need to have more of Indian products, right? When we have Indian products, then design will be Indian, then IP will be Indian, and you will be able to capitalize on the more value addition, like 60–70% type of thing. In today's global scenario, you don't do everything yourself, but you can go to 50–60% of the value addition, right? And what has happened over the last 3–4 decades, we used to have a lot of electronics products. I mean, some of you might remember the brands like Oneida, BPL, and Videocons, and all of those things, right? Now, today we don't hear any of those brands. We only hear Oppo, Vivo, and basically Xiaomi's type of the brands, right? Or in the television, other things, right? So if we want to make a serious dent in electronics manufacturing, we need to create Indian products and Indian brands which will create the depth in manufacturing, right? So that's the one part of it. And if I'm getting too long, just stop.
Yeah, we could go on to the next question and then come over.
Sure. Come back we can come over to the compliance.
We will come back to you, Dr. Gupta. So thank you, Dr. Gupta. We will now move over to Raghunathji. Raghunathji is also on the board of the Employees Provident Fund and also the AICT. So very relevant in the compliance context. Raghunathji, your experience and your experience also, and also your impressions with regard to compliance in the micro enterprise sector, please.
Thank you, Padmanand, and my colleagues in the panel. Basically, the compliance, does it relate to ease of doing business, or does it make the doing business has become a nightmare? That's a concern. If the rules are made with a trust deficit on entrepreneurs, then obviously it's a nightmare. If the rules are made with a trust on the entrepreneurs, then maybe it is better for the entrepreneurs to do business and not evade the business ethics. This country has witnessed, I am in the EPFO, as you said, we have about 50 lakhs of establishments registered under EPFO, and we have about 5 crores of members, that means employees. So we are hardly covering 1/5 of the likely enterprises in the country. And we are also covering 1/3 of the employment in this country under the social security network. So the informal sector has become much larger than the formal sector of both employers and employees. Why is it so? The question lies there. People don't want to come under the bracket of the nose of the governmental agencies. Honest businessmen are being harassed today. Some of the laws in the GST or the IT are become draconian. As you rightly pointed out, it can put the entrepreneur behind the bars. Doing or being an entrepreneur is no longer done with the respect. Entrepreneurs are looked at as a brokers or a suitcase carriers or a money launderers. This is where the problem lies. Last 2 years, pandemic has shaken up everybody, have made people realize either they comply or they exit. This is the situation we are going through at the moment. Objective must be to create a valid database. Objective must be to reward honest entrepreneurs and not just punish the dishonest entrepreneurs. Objective must be to increase the percentage of law-abiding enterprises and not make people go into the law evasions. As you again rightly pointed out, and as Dr. Satya Gupta pointed out, if there is a challan from the government, there are many ways in which you avoid getting the challan or how you solve the challan. We know about it. We are compelled to do that because the redressal mechanism to protect the interest of the honest entrepreneur is not that easily available. You go through the legal system, then it takes ages. If you fight with an official with the logical answers, then you are stuck with only fighting with him. You are not able to concentrate on business. You are not able to fight the life of every day's life of requirements as an entrepreneur. You depend on the consultant, you depend on auditors whom you don't know whether they are guiding you rightly or wrongly. But at the end of the day, if they do anything wrong, you become liable. You become punished. You pay the penalty and you pay the double penalty. If you continue to do, your account gets frozen. So unknowingly, I get caught. Then that is where the scare lies. I'll take it on further with the questions, Padmanand.
Yeah, thank you, Raghunathji. In fact, sometimes I wonder, is that why the big 5 firms, including GT, has been increasing at 30-40% even during the pandemic? Because of significant role of our services, also with regard to compliance on various issues. Anyway, we now have Rishiji. Rishi, in fact, is also an avid photographer and has also brought out a beautiful publication, which I just had a look at, on Varanasi, Honorable Prime Minister's constituency. A very, very nice book. So a photographer by passion, but an NRI who wants now to contribute towards the MSME ecosystem of the country. Rishiji, first initially on defining the challenges for the MSME sector vis-a-vis compliance, an introduction.
So Padmanand, thank you for having me on the panel. It's great to share the dais with Dr. Gupta and Raghunathji here. Wonderful ideas. Let me start out by talking about the regulatory ecosystem that affects entrepreneurs. So we have a maze of about 1,536 acts and rules which govern entrepreneurs in the country. Among them, there are about 69,233 unique compliances across union, state, and local laws. If we dissect these compliances, they are in 7 broad categories, led largely by labor, which constitutes about 30% in terms of acts and 47% in terms of compliances. If I translate that into numbers, about 32,000 odd compliances among the 69,000 comes from labor. Factories Act is a huge contributor to the labor laws. Among the next in line, finance and tax laws, direct tax, indirect tax, customs, FEMA, advanced tax, income tax, GST, and many others. Environment, health and safety, dealing with solid waste management, e-waste management, hazardous waste management, batteries, rules, air, water, soil pollution. Commercial laws dealing with hoists, lifts, cranes, pressure vessels, tools, tackles, gas holders. Secretarial laws that deal with company law, MCA, SEBI, NSE, BSE, depending on whether a company is private, limited, or others. And industry specific, which are sectoral. This is largely the ecosystem that an entrepreneur deals with. Now, let me help translate this into numbers. If you look at a pharma company, and why I talk about pharma companies, because healthcare has been instrumental in helping India tide over the pandemic crisis. If you look at pharma company today, if someone were to decide, and I'm talking MSMEs right now, I'm not talking large enterprises, an MSME with an assumption that they'll hire anywhere between 100 to 150 employees, an MSME which does between 10 and 20 crores in revenue, that's the MSME I'm talking about. A pharma company today, Padmanand, requires over 80 licenses, registrations, permissions, NOCs, consent orders to get started. It takes anywhere between 12 to 18 months with the help of at least 15 consultants to get these permissions done. Once this pharma company gets off the ground, there is a maze of 913 compliances that this company has to deal with. You translate that into a 250 business day year, and you're dealing with about 4 compliances on an average per day. This company is also dealing with a few hundred filings, hundreds of payments, maintenance of at least 48 different unique registers across the law of the land, which in this case, because we have taken an MSME, the fundamental assumption is it is a small MSME with presence in only one state. That's the complexity that this company is dealing with. The entrepreneur, Raghunathanji spoke about, needs to be focused on running the business, building the business, growing the client base. Dr. Gupta spoke about building new products, generating IP, and spending time on R&D. Believe it or not, an entrepreneur in the MSME sector today spends 40% to 50% of their time on managing compliance with the help of 5 different consultants. Labor consultant, direct tax consultant, indirect tax consultant, company secretary, and an EHS consultant. Between them, we did a lot of study and we found that the cost of consultants alone, I'm not talking cost of non-compliance or penalties, cost of consultants alone ranges between 12 to 18 lakhs a year, depending on whether this company is located in a metro city or otherwise. That's the compliance scenario as far as an MSME in India is concerned today.
Thank you, Rishiji.
I just want to come and really kind of rebut some of the things which we heard from Raghunathji and Rishi. Okay. I don't know how many laws are there, how many compliances are there. In last 15 years since I left Intel in 2003, right? I ran basically 3 startups basically in India. Okay. I've never spent more than 1% of my time on compliances. Okay. And maybe I'm living in a different world than basically these 2 gentlemen. But basically we did electronics, products, everything which we did. I think in last 5 years since GST came, even basically some of the VAT and all of those things, right? I think that has been simplified. So as a CEO of a basically electronics manufacturing company or electronic services company or semiconductor companies, I think we are basically scaring everybody away. I don't think situation is that bad. Okay. Yes, you need to do certain amount of the compliances and all those kind of the things, which never took more than basically hardly 3 to 4 times maximum basically for me. And I've been in this business of MSME startup for last basically 2003 to now 18, 19 years, right? So I think there might be certain type of the businesses like pharma where the situation might be bad. But if I talk about my sector, other electronics or semiconductor, I don't think we see this situation at all.
So Dr. Satya, Dr. Gupta, would you say that there is a high distinction, a significant distinction between high-tech industry, technocrats, maybe the IT electronic sector, and typical old economy sectors?
Maybe, so I'm not qualified enough to say that, right? At least for IT, semiconductor, electronics, services, or manufacturing in these areas, we don't basically face these things. Yes, basically you have to maintain certain registers for stock option, this, that, all those things. I think I used to have one basically accounting plus CA plus CS person, right? Which will cost me about 50,000 rupees a year. He will maintain everything for me. He will follow the compliance register and everything, right? I hardly spent any time basically other than regularly board meetings and all of those kind of the things, right? So maybe it is different from sector to sector, but I never feel harassed. Maybe once or twice some labor inspector will come, say that what do you have on this neighborhood board and all
Dr.
of those
Gupta,
kind
let
of
us
things.
stick to the flow. Absolutely fine. We'll wait for Rishurji to answer later on where you are possibly non-compliant and on very dangerous footing perhaps. Anyway, but one more question to you, Gupta-ji, is with regarding to say e-waste, this is basically from the environment point of view. Compliance is specific to the electronic sector or the high-tech sector. Would you like to specify all of them?
See, e-waste is becoming a big issue since so many electronics devices are being consumed in our day-to-day life, whether it's a mobile, tablet, Wi-Fi router, white goods, everywhere, basically every 5 minutes of our basically existence, we use some electronics device or other, right? And over the years, like because of the way the global ecosystem has evolved, the lifespan of these devices are basically shortening. Like about a couple of years back, I found my old Walkman, which is about 30 years back, and it was still working. So we don't have devices anymore. Everything goes out in basically 2 to 3 years, right? So that means it generates a lot of e-waste, right? Now, it could be a problem or it could be an opportunity, right? I would like to see this as an opportunity. Most of these devices which go to e-waste are really not fully non-functional, right? With basically certain amount of the effort in repair and refurbishment, this can be turned into a multi-billion-dollar opportunity to basically refurbish, repair these devices and provide it to the people who cannot afford the expensive devices, right? So maybe a 15,000 phone after refurbishment could be sold to basically people who can't afford 5,000 rupees. So otherwise, we will have a big problem of managing the
Absolutely.
Yeah. But if we can convert it into an opportunity to create a repair, refurbish, recycle.
Absolutely. So you mean compliances also gives us an opportunity for startups. So the ever optimistic entrepreneur, after model EO.
Always, right? Convert every problem into opportunity, right?
Yeah. Shall we move on to Raghunathan ji now? Raghunathan ji, your suggestions, you have been working for the Tamil Nadu economy, for working in Maharashtra for years, and you've been working, representing industry associations from across the country. What are the typical, you have mentioned the compliance concerns. What are the suggestions from the policy point of view, and also perhaps from the industry association point of view to resolve this? Maybe industry association can have a help desk, they can have a role of or a panel of consultants who can facilitate. And what should policy do in the context of the scenario presented by Rishiji for the old economy as well as the new economy entrepreneurs? Please.
Well, first and foremost is the government must keep its ears open, must listen to the people on the ground. And that's exactly what Consortium of Indian Associations do. We did 2 surveys during the last 2 years with connecting between the reality and the policy makers. What needs to be done is have a trust first. Don't do trial and error method of governance with entrepreneurs. Don't launch something which you use the entrepreneurs as a rat for testing. If I lose my revenue today, and if I lose my profit of operations today, it's difficult for me to get up again. A single-headed entrepreneurial companies, the owner of the company has multiple responsibilities to look after. The way you run a corporate is different. The way you run a medium scale industry is different. The way you manage a small scale is different. The way you run a micro enterprises is different. And unfortunately, under the classification of MSME, on a same track, a cyclist also drives, a lorry is also driving. So the risk of the cyclist getting overrun by the lorry is a large, and their wherewithal is entirely different to the cyclist. He doesn't even have a helmet to safeguard his life. So what the government must do is imagine a misuse of the law by the governmental servants, officials. How do you handle that? They must protect the entrepreneurs for a while. Don't try and change a regular system of an entrepreneurial driven. I have been for almost now 4 decades as an entrepreneur. From the days where there was no internet to the days where we only do with internet today. I can definitely say the life was far more easier those days in doing business than these days when I have to do compliances businesses. Today, if I misfire something, even in a data entry for that matter, because the quality of the people, what you get is far less than what it was earlier. I have had people working with me for 30 years. Today, even if somebody works with me for 3 years, I have to really appreciate. That's the level of competencies we have around us. Employability has become a big crisis today. So under these circumstances, the law must be made in such a way, I trust the entrepreneur and I don't trust the law enforcers, and frame a policy where if it is misused, how an entrepreneur gets protected. So the redressal system, a complaining system must be stronger, louder, and clearer. Today, you and I are witnessing the fellow who is taking bribe or a disproportionate income is going scot-free. So that is not possible in a system because that has become way of life now. So my opinion is design a system which is easier to follow, allow them a cautionary errors to be made, launch a system after it is doubly, triply tested with the live people, and then compulsory. That's what I would feel.
Raghunathan-ji, one suggestion, I wouldn't know if it's right or wrong. You know, we've been studying industry, so working with industry across the country. Peenya Industries Association in Bangalore was a model with regarding to compliance issues. You must say if we are right or wrong. Meaning, no inspector is allowed to set foot and interact into any of the premises, interact with any of the entrepreneurs of their member entrepreneurs. Meaning, the association alone is the single point of contact for any compliance related issues. If you bring in such kind of norm, will that also be a practical solution?
Unfortunately, the association largely has become a facilitator between the government and the entrepreneurs. I didn't use the word fortunately. I said unfortunately. They negotiate because it is easier for the governmental agencies to negotiate with one person on behalf of 400 units around there. And then say whether I inspect or not inspect. But my concern is, what if a honest entrepreneur is issued for an unintentional false? How do you classify a willful defaulter and a non-willful defaulter?
Absolutely.
How do you classify an entrepreneur who is attending to more priority on that particular day and misses out a date of 18th as a deadline date to compile with the governmental needs? How do you address if an entrepreneur who is running the company falls sick with COVID and unable to attend to the company, but still has to pay the penalty and the damages on the late submissions? How do you regard beyond a crisis rating, a company with civil scores for that matter, how an entrepreneur has performed? It's only the balance sheet that speaks. And the balance sheet, you and I know how the balance sheets are created by corporates. We have seen that. We have gone through that. So what I am trying to tell you is the real entrepreneurs are need of this country. We cannot afford them to be dead. They create the informal employment in this country, and both have to be brought into the formal, and their scare has to be removed if they want to have the non-fear of walking through the compliances route. That's all what is needed.
Rishiji, we have Satyaji, the ever optimistic entrepreneur, high tech. We have Raghunathanji, certainly not the pessimistic, but very hopeful entrepreneur with a lot of good suggestions and leadership representing the industry, typical industry MSME association. So, two questions. One is, we have two viewpoints. What are your suggestions in this context? And second one is, given the flux and changes with regard to compliance every day or every hour, as you say, how could an MSME entrepreneur keep track of this, or his professional keep track of this?
Sure.
What do you?
So Padmanand, first of all, it's great that Dr. Gupta has had a very different experience, and IT electronic sector has been relatively softer on compliance. Government has largely stayed away from enforcing. Inspector Raj has been very low. So, I totally regard the experience of Dr. Gupta. I will not contest that. It's individual to individual experience, but as a company, we've been serving over 1,600 enterprises in India. We help manage several lakh compliances a month, millions of compliance documents a year, work with thousands of enterprise users. And what I represent today is the complexity of these thousands of users. The way laws are written in India, the way they are enforced, the way they are interpreted, all of those, there is a huge transmission gap. Let me come to a specific question that you asked about the state of flux of our compliance. So I gave you some basic statistics on how numbers look from the employer compliance universe. The unfortunate part is this compliance universe is constantly in a state of flux. There are government notifications with respect to these compliance updates, Padmanand, that come on 2,233 websites, which are there between center, state, and local bodies. Over 400 in the union government, 1,240 in various state governments and union territories, and about 550 odd in the local government. Any one of these websites can today publish a notification or a gazette or a circular or a master circular or government order, which will lead to a change in compliance obligation. What are these changes? Changes to dates, one-time extensions, changes to duty structure, rate structure, interest calculations, penalty calculations, revision to forms, addition of a compliance item, reduction of a compliance item, introduction of new acts. All of these are examples of changes that happen on a day-to-day basis. In a typical year, the number of changes that happen to Indian laws ranges between 3,500 to 4,000. During COVID period, which was an unusual period of the pandemic, this ecosystem was more active, it was hyperactive, and there were about 1,000 additional changes that year as compared to a regular year. We tried and mapped these changes to an MSME, and we found that anywhere between 400 to 600 of these changes are applicable to an MSME operating in a single state with a single manufacturing plant. Some of them are informational only, where additional clarification is provided on doing a compliance. Some of them actually have a change of minimum wages, threshold values, change of duty structure on certain things, which affects an entrepreneur. Either you are using a battery of consultants who are watching this space for you, but unfortunately, there is no single website today in the country which publishes all these updates. So over the last few years, as we have been leading the technology revolution of this, we have put together teamleadsregtech.com, which is available in public domain, the only resource in the country today which scans 2,233 websites and makes all these regulatory changes and updates available free of cost, searchable by department, industry, sector, ministry, category of compliance, and providing the copy of the notification, original copy of the notification issued. Now, if you are an MSME and take the same pharma example, and pharma is just one sector, There are other sectors like chemicals and others who have a similar compliance obligation. And if you have to deal with 400 to 600 of these, and they are getting published on different days with no capability to search, sort, filter, with no subscription to tell you when a change happens. So unless you accidentally go to a website and check, there's no way for you to find out. Now, industry associations help out because some of the critical circulars go on WhatsApp. Accidentally, you may bump into something and you may end up complying. But hope is not a strategy. We have to create processes and systems which make life easier. Mr. Raghunathan spoke about that with brilliance, and I agree with a lot of what he said. The complexity is information asymmetry. In this day and age, 21st century, 22nd year, we should not have a scenario where accidentally information reaches you. World has come to a point where India is doing billions of digital payments a month. And this situation has transformed in the last 5 years. So I share the hope of Raghunathanji that we have the technology wherewithal and political will right now to bring about changes. If we all put our collective minds to it, I'm sure this burden can be converted into an opportunity like Dr. Gupta spoke about.
Thank you, Rishiji. Dr. Gupta, I remember a decade ago for the UN, United Nations body, we had studied clusters and economies across the world. You know, what defines competitiveness? How is, say, Taiwan #1 in electronics, say US #1 in defense, or Russia also #1 in defense? Why they need a war every other year? That is besides. But basically, what we found out is for technology transfer, we need two things. One is foreign direct investment into sectors where technology transfers flows to MSME sector through labor flows, manpower flows, etc. The second one is brain gain scheme. The brain gain scheme, which was introduced by Taiwan particularly and Korea, by which professors, academicians, and also ex-professionals were induced back into the economy. This is all a couple of decades ago, which they've been following through tax incentives, fiscal incentives. So meaning an income tax holiday, complete repatriation of incomes, bring back their cars without any duty, etc. Various incentives which are offered. So in a more macro perspective, along with the Inspector Raj, which some are worried about, in a more macro perspective, how do we develop this high-tech sector in India, which is largely brain run? So to say, how do we get more brains like yourself here back?
I think great question. So I think if you look last decade or so, lot of this has happened in a basically organic way. For various regions, maybe age factor, maybe parents factor, maybe other things. A lot of people have come back, right, on their own. And again, I can talk about basically high-tech sector, IT, electronics, semiconductor, all of those things, right? I won't be qualified enough to talk about steel or basically pharma or all these things. So in IT or high-tech sector, a lot of people have come back, but that's a more organic, right? What China and Taiwan type of the countries created a basically very attractive incentives for these people to come back, right? I think we should certainly look at that, and that will help. One area where basically this organic movement has not happened is basically academic senior professors and researchers, right? Means certainly after PhD, a lot of people come back and join the Indian basically institutes and so on and so forth. But we don't get basically like a 20-year experienced professors and all of those things turning back, right? Because of various reasons, right? I think if we can do something in that sector, because industry professionals are coming because of other reasons and so on and so forth, any help there will be useful, but especially if we can focus on getting this high-powered research professors to get them back to the country, provide them the right incentives, the research grants could be one way to do it, or setting up some basically new laboratories for them and things like that, right? So even if they don't move back, but let's say they spend 50% of their time in India and 50% time, so a professor in Stanford, right? I think there are a lot of people, professors of Indian origin, which can really contribute to taking our research to the next level. If we create some basically incentives like research grant, we may not be able to do that much on the taxes and other things being the type of the system we have in the country, but we can certainly provide the research grant, lab access, and some kind of a 50-50 type of the formula where they can spend 50% time there, 50% time there, which is best of the both world. That will certainly help our technology to take it to the next level. As you said, technology transfer or knowledge transfer in this case, I'll say, by means of attracting the research professionals.
Very good. I think the government should evolve a brain gain scheme now, as has been the Southeast Asian Tigers. That is absolutely required. Indians are running the economies across the world, right from the Middle East to Southeast to the US. But unfortunately, India has not benefited to the extent desired. So something should be done in this context. Even a 50-50 option would be very appropriate. Every child in India thinks of settling abroad, and working abroad. And anyone,
I talked to a lot of I talked to a lot of global academics in the leading university. I think if we put one foot forward, they will also basically
absolutely
their intent of this 50-50% type of the thing. They are very eager to contribute, but we have to create a institutionalized mechanism.
Yes.
So ad hoc, but it is a more system which we create.
Absolutely, absolutely. We'll now move on to Raghunathanji. Raghunathanji, you are also with the EPFA. So labor issues, labor-related compliances, one critical area. And another critical area in Tamil Nadu context, I remember the last webinar I was in, I was coordinating and also offering inputs with regard to an honorable exit policy. Many of the MSME sectors going down, now they cannot close down their enterprises. It may be in all the mega clusters in Tamil Nadu, or it may be even micro and nano sized units across the region. So labor and honorable exit, your views, please.
Honorable exit is something which I have been advocating, telling the government that they should have done 2 years back at least. The pandemic has hit 52 sectors from their functioning because of the governmental regulatives and not allowing them. For example, last year we had the oxygen cylinder shortages. The government took a decision that the oxygen cylinder to the industries should be stopped. Several micro enterprises, small scale entrepreneurs could not buy the oxygen cylinders for their welding purposes, cutting purposes, fabrication purposes. They sacrificed. What did they get in return? Did they at least get a time for them? Several entrepreneurs during the last 2 years of pandemic have perished with the COVID situation, or a partner no more available, husband not available, the wife unable to continue with the businesses. What did we try and do to them? We classified them like a robotic machine, just as an NPA implemented a Surface Act, took them onto the newspaper advertisements for recovery, auctioned their place where they were living, and the wife who lost her husband was thrown into the roads. I've seen this in many number of cases. I've been associated with 70 industrial associations. I know this problem is at large. So I've been telling the government, please give such people a honorable exit. Somebody selling his property and then closing the loan and putting some savings which is coming out of it into another business or to continue modernization with his business has to pay the same 25% capital gains. How is it possible? It is not possible. So we should have thought about how do we give honorable exit to the people who are unable to continue after the pandemic situation. We should have given them a one-time settlement. We should have given them a closing option at ease of closing. Explain the reasons. Explain the process, explain the genuinity of why they are closing, accept it, close the chapter and move on in life. Give them the freedom to restart in their life, give the not performing asset to become a closed chapter rather than living with the cases. So we have done all that. We have not been able to be heard. That's why I started my first sentence with you saying, if only the government has a years to year there would have been multiple problems which would not have gone to this extent of levels. We need to have ears. We need to listen to the people who are professionals on the field. We need to talk to the people who have no selfish interest or a motive when they communicate something. I am not impacted, but I speak for the others who are impacted. I can produce n number of people who have been impacted. This is what the government should have done. As far as the labor issues are concerned, migrant laborers were made to walk. It's now 2 years. Have you seen any single hostel in any of the industrial estate created for the migrant laborers, at least now? We haven't. What we should have moved on with a war footing, we are still moving on with the filing systems or approval status. So this is where we are failing. There is a gap between the thoughts and the deeds. There is a gap between the cup and the lip. There is a gap between the vision and the strategy. There is a gap between what I want to do and what I end up doing. And this is primarily because of the lack of trust on the people and having the right people at the right places at the right time.
But Padmanand, I have one question, like coming to the labor hostel issue. You know, the Government of India, Ministry of Textiles, we happen to be the project management agency for many of these schemes. So there's a worker hostel scheme. Tirupur has extensively utilized them, you know, because 6 lakh is migrant labor from the east and the central part of India. So beautiful worker hostel scheme leveraged. They have their hostels for the labor force. But if you look at the other dynamic clusters in Tamil Nadu, even, for example, Madurai or others in Coimbatore, nobody has availed of these schemes. Why is this? Is it because the Tirupur Association is so powerful? Association works together. They manage to leverage these PPP schemes on the government and manages their compliance issues also, while the other associations are not so strong. That is what we, so who are the cluster world, argue for, you know. Strong industry association facilitates compliance. It is that, and also leveraging Government of India schemes in this context.
Partly yes, partly no.
Okay.
Suppose if I have a small scale industry, let's say I employ 20 migrant laborers in my factory, and if the hostel is 10 kilometers away, I can't arrange a transport for them.
That is right. That is right.
So I don't have a wherewithal to arrange.
Okay.
So there are localized problems which might be existing, and where it is existing is a problem. Transport arrangements might be a problem. So I generally cannot comment, but all I can say is the law-abiding, honest entrepreneurs must have been listened to.
Yes. Yeah. Thank you. Rishiji, you know, the Asian Development Bank, as well as the world, the DC MSME, Ministry of MSME, are thinking of developing enterprise development centers, meaning converting industry associations to be EDCs, meaning facilitating industries to be one-stop points for compliance, quality, leveraging Government of India schemes, etc. So they are pumping in billions of dollars into this project and program. We are also involved into it. As part of SIDBI PMU, we are handling about 20 states for SIDBI for the development of the MSME sector too. We are trying to do this, develop industry associations to be role models and a facilitatory platform, including for compliance. So your views on this? Could you capacity build the office bearers of the association to provide basic compliance issues? You know, then maybe a chat box or a helpline to provide advanced compliance issues. How do we disseminate it to the grassroots level, particularly in old economy sectors? You know, is what we'd like to listen to. And also the Inspector Raj. People would not complain about compliances. They complain about inspectors. So ultimately, what is the practical and feasible option out from your side, please?
So Padmanand, I think facilitation, support, chat boxes, individual help desks, they're all good ideas. There is nothing wrong with that. And I'm sure it will alleviate the pain. Once a patient is sick, you take them to the hospital. The quality of healthcare is very important. My point is, why is the patient sick? Let's talk about the root cause of the problem. The root cause of the problem in India is the complexity of compliance that we have put together. Just to give you an example, and I love the way Raghunathan ji speaks about some of these things, so I'll take specific factual examples. As manufacturing-based MSME today has to create at least 10 different formats of wage registers, at least 8 or 9 different formats of muster rolls, leave and attendance registers, at least 5 different formats of accident registers. Now, all of these are under different acts. If you look at the core theme of why these things were done, government wanted to make sure that there is a transparent system for making sure that the wage is paid on time and based on the calculations and stuff like that. Absolutely a noble intention and thought, but look at the execution. We ended up creating redundant, overlapping, duplicate formats under different acts, gave power to the executive to create different formats and created complexity. Can we achieve the same outcome with 3 registers, one for wage, one for attendance, and one for accident? The answer is yes. But we have ended up creating 20 plus registers there. Who's gaining? Neither the government gains nor the entrepreneur gains. There is a whole army of middlemen or consultants who end up alleviating this pain for the entrepreneur. So one thing that we have to do is first rationalize this compliance mode. Look at every compliance and recognize whether they are still relevant in 21st century. Take an example of spittoon. Our laws require provisioning a spittoon in the factory. Talk about an electronic manufacturing, that's where Dr. Satya comes from, or a pharma manufacturing, or a high-end biotech manufacturing. Can you even imagine a factory where people are spitting? But under the Factories Act, you need to provide a spittoon. Bottom line, some of these rules have lost their relevance. Some of these acts were written during colonial times. Some of them were written in 1948, when India just became independent. Role of private sector was next to negligible. Private sector didn't have capacity, didn't have sophistication, didn't have capital. And some of these laws may have been relevant when the industry was minuscule. Today in 21st century, Prime Minister has acknowledged the role of private sector multiple times. Relevance of some of these laws have to be re-evaluated. And appropriately, rationalization has to happen. So that's part one. Reduce the malady itself. Reduce the amount of compliance so that the facilitation centers are more effective. Second, 2 out of 5 of these laws have criminality and jail term for contraventions. That means out of 69,233, 26,134 have criminality built into them for contravention. A sizable portion, 68% of them comes from labor. 1 out of every 3 comes from Factories Act and related rules. If you look at the specific examples, hundreds of examples are there which are procedural in nature. You did not paint the inner walls of canteen once every 3 months. You failed to whitewash the, lime wash the walls of toilets once every 4 months. You did not reconstitute the canteen committee once every 2 years. You failed to do the medical test of the cook inside the canteen of the kitchen once every year and maintain a record for that. All of these and many more are examples of procedural lapses and technical lapses. When the law is so many in number, so many different jurisdictions and authorities, 20 different inspectors, out of which 13 are unique inspectors from labor who can come and inspect your factory. And there is one single entrepreneur in an MSME who's trying to run business, grow business, do marketing, do sales, do technology, do R&D, and also do compliance along with everything else going on. These procedural compliances are too many. Criminality is too much. The second recommendation I have, in order to reduce the disproportionate amount of power we have handed in the hands of inspectors, is to reduce the criminality, rationalize it. In some cases, convert it into financial penalties. We have done a detailed elaboration in our report called Jailed for Doing Business recently, which I co-authored with Mr. Gautam Chikarmane from ORF. 10 major and 31 minor recommendations have been given. So one of the key things is to reduce criminality in Indian laws so that the harshness of the punishment and gravity of the crime can be made congruous with each other. Third, you spoke about Inspector Raj. Why Inspector Raj exists? So in a single stroke in 1991, we got rid of the license Raj. But 30 years of reforms and continuous work still has not been able to get rid of Inspector Raj. For that, we need to take away this power of just showing up on any enterprise the minutiae, the microscopic prescription that the difference between the two machines has to be 3 meters. And the length of the steps and stairs has to be so much. You have to provide drinking water, which is cool. Now, how cool? And so on and so forth. All these microscopic prescriptions create opportunity for ambiguous interpretation of the law. You can never satisfy an inspector if he is hell-bent on writing you up. If he writes you up, you are in trouble, because you can go, the inspector will move on to another position, but you can keep fighting that case for years together to no end. Are you there to run the business, create jobs, or do you keep fighting the system? So I think all of these are areas where a disproportionate number of compliances, disproportionate power in the hands of inspectors needs to be taken away. Presence-less, faceless, cashless, digital systems have to come in place, where as much accountability you have on the corporate entrepreneur, a similar accountability has to be there on the inspectors before they decide to come and inspect. Why IT industry has done well is because it has been a beneficiary of the light touch regulatory scheme. You never hear of a labor inspector generally showing up in an IT company. The trust has been greater. Raghunathanji has been talking about trust. It has been much greater. But you look at manufacturing, especially traditional manufacturing, it is a nightmare. I think a lot has been said in the forum today. A lot of ideas are there. The intention is also good. I see the current dispensation focusing on ease of doing business. Ever since we have released the report, we've already engaged with various government departments and ministries on multiple occasions. So clearly there is an intention to change. And I think we should take on this opportunity, weave this in with the problem and real life stories that Raghunathanji spoke about, and take this initiative forward.
Thank you, Rishiji. Beautifully put. I should say now we are coming close to towards the end of the session. So I would summarize in just about 2 or 3 minutes. From my point of view and experience, I suggest that in terms of concrete options, all these points will have to be taken to Niti Aayog. So we have Amitabh Kantji, because there are multifarious departments and ministries involved. There is Ministry of MSME, there is our Corporate Affairs, then there's DIPP, DIPT, now Ministry of Commerce and Industry, different ministries involved. So it is not taking it up with one ministry or department. It has to be taken to Niti Aayog. Niti Aayog convenes 2 areas where we could intervene. One is more from a macro perspective of development of the Indian MSME sector as such, in terms of a brain gain scheme. We've been speaking of a brain gain scheme for 10 years. We have not been able to introduce one. That is, I think, is something that should be brought out. We form a special committee for brain gain and evolve a scheme to ensure that our brains come back, at least partly, or even 50-50 is fine. More than enough to develop India to evolve to the next global superpower in real terms, the economic and industrial superpower. The second major issue is with regard to compliance. So another committee or a task force would have to be evolved to simplify the compliance norms, as Rishiji had mentioned. We may not be the typical MSME entrepreneur may not be compliant in 100 different areas and not even know about it. So it may be just waiting for the wrong or right inspector to come in and then point it out and then create an issue. So be it right or wrong inspector, why do we have such an environment at all when we speak of EODB? So this also has to be taken up with Niti Aayog. I hope Financial Express would compile this, take it up to Amitabh Kantji, Niti Aayog, and evolve 2 task forces to redress these 2 critical areas with regard to EODB and development of the Indian MSME sector. Thank you all, Satyaji, Raghunathanji, and Rishiji.
Thank you very much. Thank you so much.
Thank you. It was wonderful talking to all of you. I learned a lot today. Thank you.
Thank you, everyone, for this eye-opening panel. It brought to the fore the struggles of an MSME entrepreneur in India. And I'm sure many of you could relate to the anecdotes shared by our speakers. This brings us to the close of FE Boardroom's 3rd day track. Thank you all, our esteemed panelists. Thank you to our presenting partner, Commercify, and thank you to our wonderful audiences for being with us and for making this event a success. This event will be available for future viewing on Financial Express's YouTube page and our website. Looking forward to seeing you tomorrow on the final day of FE Boardroom 2022. Till then, stay safe and stay connected.